Thank you, everyone. And I want to say, Your Excellencies, distinguished ladies and gentlemen, good morning and welcome to the London Stock Exchange. My name is Aisha Salisu and I will be your host today. I welcome you all to the first inaugural meeting today on Africa Cocoa Finance and Investment Forum. Welcome and thank you all for being here. We gather at a very defining moment for African cocoa, from record high above $12,000 a ton today's volatility, from the unpaid farmers in Western Ghana to the boardrooms in Zurich and London. The question before us have really been more urgent. Africa grows 70% of the world's cocoa. Africa earns less than 6% of the value of the global chocolate trade. I would leave these conversations for the experts to take charge. So I would like to formally open this morning's program with a welcome address from Atam Sandhu. He's the Chief Executive Officer of DMA Invest, one of our convening partners. Please, a round of applause for him. Let's have Mr. Atam on stage.
Thank you, Aisha. Great to see so many people here this morning. Well, I quite like that. I speak no French and don't come from Côte d'Ivoire, but I'd love that title. Thank you. Aisha, thank you very much for that really lovely introduction and for setting out what we're here to achieve today. I've got a few pages of notes, but I think in the interests of getting on with the conversation, just to let you know, my actual title is Chief Executive of DMA. We do much of the Africa-facing work, particularly in the UK, but we also take UK investment missions overseas. We've just returned from Nigeria 2 weeks ago. We came from Gabon and Guinea last month. We also host the big investment summits in the UK, and it's an absolute privilege to have been asked to open this. I'm going to be very brief. I'm not going to refer to these very long notes and just go straight into the substance. What I'd like to do is simply start by thanking all of you for having come here today. The idea behind this event is to look at the financing behind the cocoa industry, look at value addition, which is sorely lacking in Africa. I have here all of the statistics, but I want to leave it to the experts, as Aisha suggested, in actually setting those out. We know the value of the cocoa industry. We know the value that sub-Saharan Africa, and particularly Western Central Africa, bring to these markets. We know the enormity in front of us, and we know how great this industry can be. And it's that value addition in country, and it's the capital that's required to make these changes that are going to be the key factors in driving the cocoa industry. I'd like to thank a few organisations here. I'd first like to thank the Africa Cocoa Finance and Investment Forum themselves for having thought of doing this, for having thought of creating an inaugural summit on this really critical area. I'd like to thank the IOD Africa Group, who have been amazing in convening the real drivers. Joel, thank you for all of your support in getting African business in the UK, mobilising them and mobilising the capital that's required to transform the continent. I'd like to thank the sponsors and supporters and Sunbear Global Concepts, John Vance Industries, which I believe I'm really looking forward to hearing from you. I understand that you were built on the back of some UK capital through BII, and really interested to hear how you are developing alongside Trade Data Monitor, three principal supporters that have helped us get here. And also like to thank the institutional partners of the International Cocoa Organization, the Federation of Cocoa Commerce, and the Côte d'Ivoire Ghana Cocoa Initiative, which is you, which is what I hope to be in a few years' time. I've got all the stats here in front of me, but as I say, I think other people can express it better. The volume of the market, the size of the market, its potential, what it can achieve under all of the global initiatives, and really just returning value back to Africa. And as I say, I've got a great deal of notes here in front of me. I'm sure you're more interested in hearing substantively from the people that can really comment on the whole cocoa industry. Even though I have this lofty title, I would like to pass on to the main speakers of the forum. And with that, I'd like to invite Aisha to introduce the first panel. Thank you, Aisha.
Thank you, Artem. That frames the morning beautifully well. And thank you for clarifying you're not taking his position. Okay, so our first speaker, he'll speak this morning on cocoa market fundamentals, the financing needs, and the African Cocoa Exchange. Please join me in welcoming Michael Arian. He's the Executive Director of the International Cocoa Organization.
Good morning to everyone. Thank you very much for having me today. I have been asked, first of all, let me thank the organizers and the conveners of this forum. I wish to recognize the presence of His Excellency Ambassador Touré, the permanent representative of Côte d'Ivoire. My title is correct. Thank you very much. So I'm the Executive Director of the International Cocoa Organization based in Abidjan, Côte d'Ivoire. It's an international organization. Sometimes I introduce myself as a very, very tiny FAO, okay, but focusing on cocoa. We are an intergovernmental organization. Our members are countries, producing countries and importing countries. We are not the OPEP of cacao, because the consumers are at the table as well. All right. So I've been asked to the impossible task in 20 minutes to present three things. First of all, the cocoa fundamentals: supply, demand, price, stocks, etc. Then a few words on finance and insurance needs, and something on the introduction of the African Cocoa Exchange, but I understand that the next panel will be focusing on this topic. So I will try to give you facts and figures to give you an idea of the market. So this is the first slide. In gray, the production, that is the supply. In blue, the demand, the proxy indicator of the demand is the industrial demand, the grindings, how much beans is bought by the grinders. The grinders is the first step of the processing of cocoa, producing cocoa liquor, cocoa paste, cocoa cake, cocoa powder, cocoa butter. The ingredients for the next stage of the industry, chocolate and confectionery. So supply and demand, supply in gray, demand in blue. You have 5 years here. You immediately see 3 successive years of deficit, right? 200,000 tons of deficit in 2022, 100,000 tons in 23, 500,000 tons of deficit in 24. Ballistic increase of the prices in 24. It's just the effect of supply and demand. Last year, we had a reasonable surplus of 75,000 tons. I will not give you figures for this year because we are not allowed to give figures of the current year, not to be quoted by people who would say that we are predicting something at the end of the year. Probably we will have a surplus, a moderate surplus. The red line is the price, okay? So what is the price of cocoa? There are many prices. You have the farm gate price, you have the international price, you have the price in the country of destination. So according to the International Cocoa Agreement, the ICCO is producing an ICCO price. It's an average of the 3 nearest contracts in London and the 3 nearest contracts in New York in pounds, in dollars. So we mix up all of this, we make an average, and we arrive at a certain price. Every day we publish the CCO price. Okay, so the average price in 21-22 was about $2,600, up to $8,400. Okay. Today, the average as from 1st October 25 until today is $4,600. But if you go at ICE and check the price, it's 3,200. Huh? All right. So you see immediately that what has triggered this increase of the price in 24-25 was the deficit of 500,000 tons. So this is a very interesting graph, I believe. It gives you 50 years of historic price. So I want to make it very clear because I have read too many times people explaining that in 24 we had reached historic prices. No. They were not historic in the sense that they have returned to the price that was prevailing 50 years ago. It's just that people are comparing apples and pears. When I bought my first car 45 years ago, I paid $1,000. The same car today costs $10,000, but it hasn't been multiplied by 10. It's the same price. So $10,000 of today are equivalent to $1,000 of 40 years ago. Same with cocoa. Cocoa in 80-81 was at this level in nominal dollars. But those nominal dollars are almost 8,000, okay? What is true is that you see the peak in 24, of course, where the prices went up. The other important information on this graph is the so-called stock to grindings ratio. How many months of cover do I have in stocks to cover my grindings? The lower the ratio, the higher the price. Okay? The lower the ratio, the higher the price. The higher the ratio, the lower the price. Right? We will come back to that. So, a few figures again on the production. So you see that Africa is producing 70% of the world global production, 3,200. Those are the 2025 figures. Huh? Again, we don't give the 26 figures. Production is concentrated in Côte d'Ivoire, Ghana, and to a lesser extent, Nigeria and Cameroon. The next continent of production is South America, with much less, 1,000, a bit more than 1 million tons, with 2 or 3 major players. Ecuador is a major player with about 600,000 tons. Brazil, paradoxically, is not an important player because they consume what they produce. So they are not active on the international markets. So the second country active in cocoa trade in South America is Peru. Asia, quite an interesting continent, is producing less and less cocoa beans. Indonesia used to produce 500,000 tons. Today they are below 200,000. They don't produce beans anymore. Malaysia, 0. But they have developed a grinding industry, so they are buying all the beans from Africa to transform, make the added value in Indonesia, in Malaysia, and Singapore, and re-export to the region, or even back to Europe. Grindings, so grindings, I repeat, is the demand, but the industrial demand by the processors of cocoa. Their situation is different. You see 2 big continents coming into the picture. Europe, the biggest grinder, 1,600,000 tons ground in Europe, mainly in the Netherlands, Germany, Belgium. And then you have Africa with a lot of grindings, local, what we call grindings at origin. But I must say, only Côte d'Ivoire has been able to develop a large grinding industry. Ghana has developed some industry indeed. You see 186,000, but it's 20%, even less, that it's 20% of what they are producing. What is clear is that Asia is developing the grinding industry, okay? In Africa, Cameroon is also grinding, but Nigeria, I know there are a lot of Nigerians here in the room. It's very sad to see Nigeria unable to grind more cocoa. You have a lot of installed capacity, but those factories are not working, are ineffective. Could be rehabilitated, I believe, with some financing. But other things need to be in place, like power, of course. So that's enough, I think, for the description of the fundamentals of the market. Here we have tried to quantify how much money was needed at each stage of the value chain, right? So we can start with what is the value of cocoa? Well, 4.8 million tons of cocoa times my ICCO price makes a total value of 22 billion. The producers, of course, needs money, very small money. An average producer has 2 hectares producing 1 ton. Okay, so very little. What kind of financing does a producer need? Some inputs, $300-400 a year. Well, multiplied by 5 million producers during a few months, we estimate that the entire value chain of the producers need about $700 million every year. The collectors, if I take an average collector or an LBA, licensed buying agent, buying 100 tons, they would need about 3 billion, all collectors in the world. Same for the domestic traders. We have calculated the working capital needed for trading 1,000 tons. We arrive at 3 billion. The exporters, they need 5 billion, okay? We are talking about working capital. And then, very interestingly, the grinders, okay? The grinders, I would say the average size, or the minimum size rather, the minimum size of an efficient and productive factory is 30,000 tons. Below 30,000 tons, you are hardly profitable, okay? You have factories of 100, 200,000 tons in Côte d'Ivoire, for instance. But the needs in terms of working capital are very often underestimated and neglected. The problem for investing in grindings is not the capex, it's not the capital investment. This factory of 30,000 tons could cost perhaps 50 million. It's not much, I mean, in terms of profitability. But the same factory would need 200 or 300 million as working capital to buy the beans. You have 3 months to buy the beans, but you are grinding in 1 year. Yeah? So you need a lot of working capital. Another thing that is very often neglected, the cost of insurance or the needs of insurance. Today, every year, the ICCO, it's an obligation of the International Cocoa Agreement, we have to do a survey of the level of stocks in the world. We've done that in January, February 26. We have assessed the volumes of cocoa beans at the end of the year. The end of the year in cocoa is 30th of September. And we have arrived at something between 1,100,000 and 1,300,000. The difference is the 1.1 is what we have been collecting from our informants. 1.3 is the theoretical, statistically derived level of stocks. So we can safely say that there are about 1,200,000 tons in stock. There were 1,200,000 tons of cocoa beans stocks in the world, in about 100 warehouses. I put significant because there are many small warehouses. There are also industrial stocks by the industry. But all in all, we have about 100 warehouses. We receive information from about 80 of them. All right? So just as an example, to give you an example of the two largest inventories in the world, Belgium and Netherlands. 8 warehouses in Belgium. The average size of a warehouse in Belgium was 25,000 tons. In the Netherlands, 38,000 tons, right? Among a sample of 6 warehouses. So it gives you an idea of how much insurance you need to insure each and every warehouse. 20,000 tons multiplied by $4,000 is a lot of money. The same, something that is neglected, the floating stocks. When we do the existence of stocks, there are stocks on vessels, right, floating. Today there are about 100,000 tons of beans on ships, on shipments, right, that need transport insurance, maritime insurance. We estimate that at about 100,000 tons, $500 million at CIF price. Okay, so that was the financing needs. So the next 3 slides, I will be using actually slides that have been presented to the 4 countries involved in the establishment of the African Cocoa Exchange that we will discuss at the panel. Just one slide explaining what happened in 24 and a comparison between the theory and what I call the reality. So in theory, a commodity exchange, a cacao commodity exchange is an excellent tool for price discovery. Okay, so you have the futures price in 3 months, in 6 months, in 9 months, in London, in New York, sending signals actually to the markets. If the market expects a supply, or if the market supplied a deficit, of course, the price in 3 months, 6 months, 9 months will be higher or lower than the price of today. And it will send early warning signals to the operators. So, for instance, the producers, the exporters, will manage the supply. If they understand that the market is expecting a shortage, they may have more beans to put on the market. If they expect an excess, they can maybe keep some stocks to avoid prices going down. And grinders have receive signals to manage their sourcing if they must expect a shortage of beans in the coming 3 or 6 months. And all stakeholders are supposed to have instruments of risk management, right? Option, futures, forward contracts, etc. So there is some kind of self-correction, auto-correction of the market, a sophisticated way to call the invisible hand, where the market does adapt to the situation. But in reality, it did not function like that, in particular in 24. Why? Because we have seen, with the signal of a reduction of production of about 10%. You remember my slide with 500,000 tons, 500,000 tons of deficit, compared with 5 million tons of production, 10%. A 10% reduction of production triggered by elasticity of prices, an increase of 5 times. So the price went from 2,500 to 12,500. So minus 10% plus 500%, right? So hyper elasticity of prices to the supply. And a year later, the other way around, the prices collapsed by 75%. They went from $12,000 to $3,000. Again, because of a relatively limited reduction of demand, minus 5% of grindings. So actually, what our analysis is suggesting is that speculators, algorithm trading, just amplified the volatility, amplified the elasticity. We are not saying that it did cause the elasticity, but it did amplify the reaction of the market. And actually, the West African producers and traders were deprived from using those risk management tools. Okay? So that's where we are coming from to decide to propose the establishment of an African cocoa exchange. So we have been studying with a group of experts the possibility of establishing an African cocoa exchange. We are discussing with Côte d'Ivoire, Ghana, Nigeria, and Cameroon to put in place a system where actually the pricing power would return to Africa, right? Creating a credible West African cocoa price discovery. So the price will be fixed in Africa, not in London or New York. There are a lot of advantages to that. Of course, it's a kind of political ambition, a political objective. But actually, it has a lot of technical and practical advantages because it is based, and that is probably one of the most important things, would be based on a system of warrants, of warehouse receipt, where the farmer and the cooperative could store their beans and use their beans that would be certified as collateral to have access to credit. It would also give processors a place to source their beans, competing with the exporters, and have access also to finance via the collateral and also some insurance, of course. It would also offer the opportunity for the countries part of the exchange to incorporate, to introduce the African sustainability standard, because not any cocoa would be allowed to be placed in certified warehouses, but sustainable cocoa. So we could kill two birds with one stone, having access to credit, but also imposing the norm in a way. And last but not least, probably one of the most difficult things at this moment, but we can hope that we can translate the political will of African integration into practical operation by unlocking what we call intra-regional trade. Ivorian cocoa sold on the Ghana Cocoa Commodity Exchange and the other way around, instead of having those smuggling operations that we are calling cross-border operation, nicely. But we have seen in 24-25, the grinders in Cameroon, for instance, desperately looking after beans and willing to buy beans from Ghana and Côte d'Ivoire. And finally, my last slide. So what we are proposing is not a revolution. We are not going to tell the countries, oh, you have to change your system, there will be a regional authority, a regional regulator. Not at all. We propose a hub-and-spoke system with the countries remaining in the driving seat. In each country, each regulator keeps the authority to regulate the national commodity exchange. But above, you have a hub facilitating the intra-regional exchanges. Okay? So we insist on the national ownership of this strategy, with the national regulatory authorities still regulating and being accountable at country level. We have already existing national commodity exchanges. There is a Ghana Commodity Exchange in Ghana. There is a national Bourse des Matières Premières Agricoles in Côte d'Ivoire. We have several exchanges. There are also people from AFEX, I think, in the room. They will be interesting to hear them, what is their take about this proposal. In Cameroon, there is no exchange, but there is a system where the public-private platform, CICC, is organizing auctions on a regular basis, which could really be the basis for this national exchange. So with that, I will stop my presentation, and I'm really looking forward to participating in the panel and answering to any questions. Thank you very much.
Oh, thank you so much. The applause already said everything. That was a very beautiful conversation, well put together. Thank you. And we've seen the gaps, and it's left for the room to see the opportunities that daring. Before we proceed, I'd like us to recognize the presence of the Ghana's High Commission to the UK, Dr. Zita Benson Saba. A round of applause for her, please. We're happy to have you in our midst, and I'm also delighted to see powerful women, especially in the position of power in Africa, to be part of conversations that shapes the continent. Thank you. So moving on quite swiftly, we will now turn to our first panel of the day. It's on the structure, liquidity, and alignment of the proposed commodity exchange with global cocoa market. Moderating this conversation is Dr. Sophie Van Hullen. Please, can we put a round of applause for her as she makes her way up?
You want me to sit in the middle? Okay.
Joining her will be Michelle Arion of the ICOO, Ted George, founder of Kellogg's Advisory, and Akinyinka Akitunde is the Chief Executive Officer of Africa Cocoa Commodities Exchange. So, Sophie, the floor is yours.
Thank you so much, Aisha, for the kind introduction. I will go straight into the topic, following, of course, on from the keynote. And I would like Michelle to start reiterating the opportunities that arise from setting up an African cocoa exchange and reiterating the rationale that you have laid out so beautifully. Thank you.
Thank you very much. Do I have to speak into the micro? No? It's okay? Well, I can indeed repeat that you have the political ambition of returning the price discovery to Africa. It's not normal that 2/3 or 70% of the cocoa in the world is produced in Africa. And Africa is still a price taker, not a price maker. Well, of course, it's a political will. That's also something that will be discussed, I think. But the entire system has a lot of advantages. I think that the core element of such an African cocoa exchange is based on this system of warehouse receipts. We have seen the importance of the stocks, of the inventories in cocoa management. And this system of African cocoa exchange could indeed allow for a more formal registration of the stocks with the issuance of warehouse receipts being used not only to certify the existence of the stocks for the market, but also for the banks. That is to offer the possibility of having access to finance via collateral, via warrant, which is a very common system. The other thing, of course, is the regional aspects. I mean, Africa has signed the free trade area. By the way, the Secretariat is in Accra. I think it's time to deliver on that and allow for free movement of goods, at least between the West African countries of ECOWAS and with an arrangement, of course, with Cameroon to cross the border. But this regional aspect is extremely important. One should not underestimate, of course, the challenges. I mean, you have 4 countries having 4 different currencies: West African franc, Central African franc, cedi, naira. How do you combine that? Well, we will see. But the idea is to keep the national regulatory agencies in charge of the system. The idea is certainly not to create a regional regulator of whatever, but harmonizing the way the regulators are working together. Thank you.
Thank you so much. Very good points. And of course, we have to remind ourselves that the current currency arrangement is also quite complicated with the British pound and the US dollar conversion against the domestic currencies. Ted George, thank you for joining us. I will hand over to you to explain a little bit where you are with the implementation of the African Cocoa Exchange and the next phase. Give us an update, please.
Yes, thanks very much. Delighted to be here. Thank you for inviting me. I am part of the team which has been working on the Africa Cocoa Exchange project under the aegis of the ICCO. And the thing is, the commodity exchange is not a new idea. It's been around, I think, for at least 20 years, or possibly more. I myself have been involved in this for 4 years. It took us a year to actually get agreement to kick off the first phase of pre-feasibility. In the summer of 2023, we had a workshop in Ghana hosted by COCOBOD. We had all of the main players there, and that's where we agreed that the best approach really is this hub and spoke model. I've got to tell you that there are so many reasons that you could come up with why this couldn't possibly work. In fact, when we first started out as a large group of, when we got the entire team together of, it's about 14 of us who are part of the advisory team, the first 2 meetings were filled up with us explaining why it could never work. And eventually we said, hey, okay, stop here. Okay, how could it work? And the fact is, it absolutely could. And a lot of it is to do, the approach we're going for is to try to not make the same mistakes that were made before. There are multiple commodity exchanges across Africa and the developing world where they trade virtually nothing. It's one of the saddest things. You go into a super modern office, there's hardly anyone there, and there's a ticker going around with 2 stocks, which never ever change, right? If you build it, they won't necessarily come, right? You need to get liquidity and people using it. And it's the old chicken and the egg, which I think we'll get onto later in this panel. So we really thought long and hard about how this could work. We went into the second feasibility stage in 2024. We went all over the 4 major countries. We met pretty much everyone we could in the value chain, along with the regulators as well. And then we presented our final report last year. And in fact, just last week, we actually presented the final report in a stakeholder workshop, and we have completed phase 2, and we're getting ready for phase 3, which is implementation. I think the real thing to say where we are is we have all the pieces now. The model with the 4 regional exchanges leading into a virtual, if you like, the 4 national exchanges leading into a regional exchange is something which can deliver on all fronts because it's so constrained, the trading of cocoa within Africa. There are, for example, in the east of Nigeria, multiple processors there, grinders of beans, but they don't have enough beans. And then in the west of Cameroon, you've got loads of beans and they're looking for a market. But currently, it's very difficult to get those beans over the border. The possibility for cross-border supply chains where both sides are benefiting and capturing the value. And let me tell you, the value capture is incredible. Just to give one example, and this is admittedly going back to, let's say, 18 months ago when prices were very high. But for example, if we take in Ghana, the average price a farmer was getting, let's say per ton, was around 4,000 euros, okay? COCOBOD would then sell those same beans to the grinders for 8,500. That's a great margin for COCOBOD and for the supply. But once that is ground, the grinders were selling that for 22,000 euros a ton. Now, of course, you have to factor in, it's not exactly, you can't exactly measure these up. These are different amounts of product. And obviously, there's the cost of processing. But the potential value capture is huge. And in fact, we saw many examples, particularly in Cote d'Ivoire and Ghana, of genuine value addition, really, really, really bringing value. But one of the big problems facing all of the local processors is at that time, they couldn't get hold of the beans. Why? Because of the big trading houses who very much run their own supply chains and have a stranglehold on the sector. So this setup enables so many different actors to actually benefit from it. Farmers, small producers, aggregators, they can take their beans to the exchange. Those of you who know a lot about cocoa know every year farmers have what are called the months of hunger between the end of the main crop and up to the beginning of the new main crop. So let's say between, March, April, all the way through to September. September is when they need school fees, but the new season starts in October. A lot of farmers sit on their beans expecting production to go up, they lose quality. Well, what if they could go to the exchange, deposit it, get it certified, get a warehouse receipt, instant financing? So hugely helpful in that front for all of those and for the value chain actors. For processors, access to beans any time of the year. If they've been shut out of the market by the big trading houses, they can always get the beans on the exchange, plus insurance and all those other products around it as well. And then, essentially, more broadly, I think this thing of price discovery is just so ultimately central. Why is it that the London price is driving the international price? I think it's something like 0.2% of world cocoa stocks sit on the London Exchange. Some of those beans are 10 years old. They've just been traded back and forth. It's totally disconnected from the actual production in Africa. So very simply put, this is about bringing back the power of cocoa to Africa. So in terms of where we start, we want to start from the ground up. We've been speaking with AFEX, and in fact in Nigeria, we're going to hear more about this, about doing a pilot there, a pilot with warehouse receipts. They already have warehouse receipt financing. We want to show how this could work. We get a number of producers, a number of traders, a number of grinders, exporters. We show it can work. You build it out from there with real flows. That attracts the liquidity. That's how you can grow it. Similarly, as Michelle mentioned, there is, in Cameroon, they run auctions. We also plan to do a pilot there to run an auction, and again, to try and introduce it under the aegis of the AFCX, because all of this feeds into better market information, better access to liquidity, and ultimately will attract in all the different players. And my big surprise from the engagement we've had is that once we were able to explain the benefits of the exchange, the actual blockages that we're expecting weren't there. For example, in Nigeria, I expected the local buyers to be like, look, we're in control of the supply chain. We're not going to let someone else come in. Not at all. They're like, oh, well, if now our role, instead of aggregating and selling to the off-takers, we actually take it to the exchange, fine. As long as we still get a cut from this, we can drive this, why not? There's big opportunities there. But we have hit certain challenges. So just to wrap up the opening comments, I'd say, in terms of what we need to go to the phase three, now we have the model, which has been approved and signed off by the 4 different regulators. What we really need is, in order to move in towards implementation, the plan is very clear, but we have these big issues. The biggest one is political will. And in fact, this is something Michelle mentioned as well. Unfortunately, during this period that we've been doing the project, the cocoa sector has gone through just unbelievable ups and downs. We had a stratospheric increase in prices, which actually forced the regulators in Côte d'Ivoire and Ghana to hugely increase their fixed farm gate price to prevent smuggling to other countries. Then we had a total collapse in prices, which left everyone scrambling, right? And so I think the thing is, there needs to be political will, but we've had a change in leadership in Cocoa Board. There's always elections hanging over every single country as well. That is critical if this is going to survive. And I know the ICCO is heavily involved in that one, pushing to get the political alignment. It has to be an agreement at the top. We need the regulators to be on board. There needs to be reform. And obviously, one of the biggest challenges will be in Ghana, because they are probably the most heavily regulated sector. They also have, without question, the most efficient, in fact, world-class supply chain. I got to see the cocoa port that Cocoa Bud runs in Takoradi, 5 warehouses of 20,000 tons. It's 100,000 tons of beans going through there probably every few weeks, not a bean out of place, incredibly high quality. But we need to have the regulators on board. And I think one of the big ways to get the politicians, the countries and regulators on board is to recognize that there are different functions of the exchange which could be split between them. We have the marketplace, the clearinghouse, research, and management information. So I think on all those things, they could be split between the different countries. That's what we really need to get the involvement of all the different parties to make this a reality.
Thank you, Tat. Thanks for sharing the vision and also updating us on the process. And indicating already that some of the infrastructure that is needed is already there. It just needs to be purposed. We actually have Akinyenka here, who could educate us, please, about the experience of the AFEX. And my understanding is this market exists. So what are the lessons that could be learned? Thank you for joining us.
Thank you. Thank you for having me. And good morning, everyone. I'll be speaking from the private sector perspective. And AFEX is a company that tries to establish and run a commodities exchange in Nigeria. So when we started, the idea was for us to have a market where we don't necessarily replace what is existing in the market, but rather provide a platform where you get to aggregate all of this structure and make the value chain much more efficient. And over the years, from the private sector perspective, there's been a lot of issues. You know, when you work in the agricultural ecosystem in Africa, it's highly fragmented from the supply side. But on the other side, when you look at the buyers and the manufacturers, they are more consolidated, bigger players. So the question is, how do you bridge this gap? Now, the other problem you now have when you want to run an exchange is the fact that most of the bigger guys already established their value chain down to the supply side, all operating their own verticals as companies independently. So you need to have a convincing structure where you need to let all of them know that if you come to the exchange, you could meet your needs, right? And not run short of your supply. And that's pretty much what we've been doing across the business, and which is basically our role in the cocoa value chain as well. And I'll tell you for a fact, there's a lot of infrastructural gap in Nigeria and across Africa. The idea of warehouse receipts works. I mean, I don't think anybody doubts the value of having the exchange, having the financing system in place, having the warehouse structure to check the quality and ensure delivery. We all know the value works. But the question always comes to who's going to provide the capital to make this work, right? If I'm a trader in the cocoa business, I already have my operations. I already have my international buyers that I supply to regularly. I have contracts with them. In fact, I'm sure this week there will be a lot of deals closed in the cocoa ecosystem against the next trading season, right? So all these are already going on. But we know the value the exchange will bring on board. But the question is, how do we unlock the capital to make the exchange work? The exchange is highly capital intensive. For example, in Nigeria, the regulatory authority, which is the Securities and Exchange Commission, recently increased the capital base for exchanges from about 500 million naira, which is about 250,000 pounds, to about 5 billion naira now, which is about 2.5 million pounds recently. And exchanges need to capitalize this. Now you're talking about exchanges that need to build the whole infrastructure from the technology required to connect producers to the ecosystem, to warehouses that would serve as collection centers, to developing the regulation that guides the electronic warehouse receipt system, to the clearinghouse that provides liquidity for this. So all these are huge capital-intensive products that need to work. So the question is, how do you make this ecosystem work in a way that unlocks additional value for everybody? There's no way you can tell a cocoa trader how much more he could better trade than to show him that he's going to get 5-10% more if he comes to a structure, right? There's no way you can tell farmers how to produce, how to do their work. Rather, the best thing you can tell them is if you come through this structure, you either get your cash up front or you get incremental value on this. Now you now have to balance a lot of moving parts across the ecosystem. How do you get the buyers to ensure they prepay, get the funds into the clearinghouse, and when delivery is made, the suppliers get paid, on one hand. On the other hand, how do you get banks, financiers to play in this ecosystem? You made mention about the price being discovered here in London, whilst the volume trade is very little. But we also need to look at London being the financial capital of the world. There's a lot of capital here that is not leaving the shores of this country. We don't have that powerhouse of capital in Africa. I mean, most banks would rather invest in government securities than put it in infrastructure. But these are all vital parts of the ecosystem that needs to come together to make it work. So our role in these engagements is to lend our voice from the private sector perspective. We are all aligned around the value we could unlock if we have the infrastructure running. But I think my go-to place would be more investment in infrastructure. And it's not necessary, it doesn't have to be huge investment at start. If you have delivery points at ports across the continent or across West Africa where farmers could deliver to, or the CBAs or the exporters could deliver to, and once it's delivered and the quality checked, they can get their financing either in local currency. I know Nigerians love hard currencies, so you can make the payments for them in dollars at that point. You'll see more traction. But the question is, who brings that capital, and how do we get the capital to work in a way that is transparent and adds value for all players across the ecosystem?
Thank you so much, Akanika. You already kind of transitioned to my final point of the discussion, so thank you so much. Making my job rather easy, which is the big question of like the chicken and egg, right? So how do you create this demand that then actually makes the exchange a useful institution and one that offers the opportunities and unlocks the opportunities that we have talked about? I would ask, before I hand over to the audience, because I'm quite keen to hear from actually the private sector and the audience what they are thinking and the questions that they have. But if you can mention one, it was less than 1 minute, the one thing that you think will really unlock the demand and bring in the capital into the African Cocoa Exchange.
Yeah.
Please, Michel.
No, I would like to start with one clarification, because I think Ted has been a bit over-optimistic.
Of course.
This proposal has not been approved by the 4 countries concerned, right? Okay, so we have approved the final report, but it has to be submitted to the 4 countries, right? We have had a good technical webinar with a lot of positive feedback from the 4 countries, that is true. But still, it has to be, so it's very important to mention that there is absolutely no agreement by any of the 4 countries on the establishment of an African Cocoa Exchange. To answer your question, I think we need the buy-in of the private sector, because otherwise we will have a very nice system with 5 tons. No, we want to reassure all the stakeholders of the value chain in the usefulness and the profitability of the entire system. There are a lot of advantages, clearly. One of them being a modernization, revamping on all the infrastructure. That's always very good. Always very good to invest, I believe, in warehouses and in systems. There is one problem that I did not mention when I showed the needs of financing. In 24, we have seen the problem of the banks reaching their limits, reaching their ceilings by the central bank. You know, the banks cannot give loans like that. They have ceilings. And with the doubling, I mentioned the total value of the today is 22 billion. Well, in 24, it was 50 billion. Okay, you cannot find 20 billions like that. Huh? So that's so when I say buy-in from private sector, including buy-in from the banking system.
And, yeah, liquidity of the, and also single
Liquidity,
lender requirements.
yeah.
Ted,
Yeah.
less than 1 minute.
Yes, and I would say I am definitely ever the optimist, without question on that one. And yes, clear on the clarification, but, you know, after 4 years, we have to remain optimistic. It's going to happen. I learned that one in Nigeria and in Lagos in particular. What I would say, the one thing I think would unlock it without question, warehouse receipt financing. I was head of research at EcoBank for 8 years. Every year we would talk, and I was covering cocoa research. Every year I would talk to the different RMs, the different, in the 4 countries, the bank. They'd always say, we want to lend more and more to the agricultural sector. They couldn't, because just risk, you didn't know who people were, no way of getting security over the goods. It just couldn't happen. It was basically almost, you know, it was a bet. So with warehouse receipt system, if it's set up properly, you've got a very good supply chain, it's well managed, and you've got clear pricing mechanism as well. It is essentially zero risk for banks to lend to. You lend, you get the warehouse receipts, you get title over the warehouse receipt, and you can set automatically the exchange that if the price drops below a certain point at which the bank would lose money, it automatically sells, the bank gets the money and gives whatever is left to the person that they lent the cash to, you know, minus what they lent them. So it is potentially risk-free. And for me, that would unlock it, because if the banks can see that opportunity, they have a long-standing mandate to support farmers in the cocoa sector a lot more. This is the way to do it. And then you don't have to worry about lots of the different kind of KYC and everything. It's been dealt with by the exchange. So for me, that's what unlocks it.
Thank you, Tad. Also, big opportunities for trade financing there. Akaninka, final word.
Yeah, I think for me, it's going to be more around key partnerships. How do we get the established exchanges trading these commodities to partner with local exchanges? And the reason for that would be when the market reacts to information and how they process it depends on how it's being positioned. So imagine ICE London coming to Nigeria to establish a strong presence, or CME establishing a strong presence in Nigeria. is going to send a huge signal into the markets globally and help drive more transactions through the ecosystem and make this goal we're trying to achieve much more easier to achieve.
Very important point. Thank you so much to the panelists. I would want to open now, but before that, Aisha, can I ask you the remaining time that we have left?
This conversation is so interesting. We don't want it to end, but we just have 5 minutes.
5 minutes. Excellent. Those who want to ask questions, can I ask you to briefly mention your name and then come straight to the question? Please. The gentleman in the grey, beautiful grey suit. Yes. Yeah. It's you. Don't. No. Middle row. Yeah. Thanks.
Oh, thank you so much. My name is Sonny. So I run a company called Sahara Farms. So what we do, we digitize and securitize the agricultural value chain across multiple crops in Africa. So first of all, thank you for organizing this. We really need to have these conversations. And with reference to the capital and the infrastructure, so there's plenty of liquidity in the world today. So money is not rare. The major problem is de-risking. So mine is pretty much an announcement. So that's what we do at Sahara Farm. So all what you've mentioned is what we can do. We can digitize the entire agricultural business value chain, the cocoa value chain. We can also, as I've heard that you have not yet gotten the buy-in of the 4 countries, we can also mobilize our proprietary ecosystem of a partnership with DFIs and also our relationship with all the countries in Africa to make that happen with you. So digitization, securitization. So we're already involved in some of the countries, including Nigeria, with a special agro-processing zone, which is African Development Bank funded. So we can mobilize that. So I don't know how imminent and how ready you are with your project. So that's what we can do. Thank you.
Thank you so much. Can I ask you to maybe leave your business cards with the 3 gentlemen here before the end of the day? Leave your business card with the 3 gentlemen on the panel before the end of the day. Thank you. Sure. I'm sure they will discuss that. Thank you so much. Any more questions? Far right middle. Yes. Yeah.
I have the microphone, so.
The gentleman with the, I think, black. Sorry, it's hard to see. Black sweater? In the middle.
So my name is Alex Asanvo, head of the Côte d'Ivoire Ghana Cocoa Initiative. So I have the microphone. So
brilliant. Go ahead.
So I'm the head of the Côte d'Ivoire Ghana Cocoa Initiative, and I think I've heard a lot of the exchange. I think I discussed a few times with some of the experts, with Arion. I've been involved in the discussion, but maybe for the audience here, I would like us to be a bit more concrete. So we heard some of the constraints, some of the opportunities. Let's say if Ghana or Côte d'Ivoire, the 2 major producing countries, say, all right, let's go for it. What concretely needs to happen? Because it's important. Sometimes I think it's good, visionary, everything, but there are changes that are required to implement even the first step of the exchange. So it will be good for the audience and all of us here to hear from you, because very clearly the way the system works, there is no way an exchange can be even implemented.
Thank you so
but
much.
If any, then please tell us. Thank you.
I think I will pass this question on to Tat, who seems to be on top of the operational side, and then the others can jump in. But it would be great if you can hand the microphone, in the meantime, 3 rows to the front. Yeah, Tat, please.
Sure. That is the $30 to $50 million question, essentially. How do we get this up and running? Look, I think the truth is, if you're looking about what needs to be done with regulation, we had a team of lawyers, ex-Suzio, working on this. Their report, I think, goes to about 45 to 50 pages in terms of things that need to happen. I would say, putting it in simplest terms, political buy-in, and this is something we've actually discussed quite a lot with the ICCO and the team as well, getting the right political buy-in from the top. If we know it's coming from the presidency or from a key ministry, and that is clear to everyone in the regulators and the government, then that gives it the chance to actually happen. And then I think 2 things in parallel. One is raising the financing. We estimate it'll take something like $30 million to $50 million will be required in capital to set up the exchanges and run them for the first 4 to 5 years. And certainly there's no reason they can't be profitable relatively early on. A lot of that is integrating existing systems. So we're not talking about building a whole new load of infrastructure, certainly augmenting it and improving it. And in parallel with raising the financing, that is the engagement with the regulators and to work out what needs to change. In the case of Côte d'Ivoire, in the case of Ghana, you could say quite a lot needs to change there. But in the case of maybe somewhere like Nigeria, we're still waiting for the National Cocoa Management Board to be created. That's much more open in what could happen. But those two processes aligned to get the regulators on board and to get the financing in place, those are the key things. Because as Michelle said beforehand, this is about innovation. It's not about creating a whole load of new stuff. It's about taking existing stuff and putting it together in a different way. So we get the political buy-in and then in parallel raise the financing and get the regulators on board. That's when I believe we can go to implementation. And we're going to need everyone to support us in that, including yourself.
Thank you, Tad. I think we're in the right room for this, since we have, Your Excellency, decision makers on the political side, but also financiers. Michel, did you want to?
No, I wanted to say we must avoid the top-down approach. Yeah? We need bottom-up at country level. We first need an agreement at country level between the regulator, between the overseeing Minister of Finance, that we are talking about a financial institution, the Minister of Agriculture, where there are already existing national commodity exchanges. We need to expand the scope of the responsibility of this commodity exchange to cocoa. Cocoa is very often not included in the list of the product that the existing exchanges is dealing with. We need a warehouse system with a legal protection and legal clarification of who is responsible of what between the buyer, the seller, the bank, and the one issuing the certification. So the first step is at local level, and then in the medium term, an agreement between the 4 countries. That was a question discussed in the last seminar about the legal nature. Do we need a treaty and an international agreement between the 4 countries? Or first 2 and then a third one and then the 4th one, open or not? You see, so there are plenty of legal and financial questions, certainly. But to try to answer to Alex's question is, first of all, a national agreement, not only at political level, but also at technical level, and how to make it real.
Yeah, and probably building on the Ghana Côte d'Ivoire initiative.
Yes.
I think that do we have time? No, we don't have time for further questions. I do believe these gentlemen will be available for questions over the coffee period.
Coffee break, yeah.
Sorry. Was that my question? Or? I think Aisha said we have to stop because we're already running out of time. Can I invite you to have coffee with us during the break? Thank you. Also, there was a lady somewhere, who wanted to ask a question. Please join us for coffee later on. Thank you so much. Thank you for the speakers.
Thank you very much, Sophie, and your panelists. That was very sharp and interesting. I also got lost in the conversation that I actually forgot my duty. For those that have the questions, you can have them after. I also want to recognize the presence of our Excellency, the Ambassador of Côte d'Ivoire to the UK. Okay, so Sunbird Global Concept is one of the most consequential names in African cocoa today. It's a Nigerian firm that has redefined what domestic capital mobilization can look like for a continental commodity. Our second speaker is Sunbird's Chief Operating Officer. He'll speak on financing African cocoa flow and on Sunbird's leadership in domestic capital mobilization. Please join us in welcoming Mr. Nzubuchukwu Anisiobi. Please, a round of applause for him as he makes his way.
Good morning, everyone. My name is Nzubuchukwu Anisiobi, Sunbird Global Concepts, Chief Operating Officer. Aisha, thank you for having us here at this event. I have a well put together speech and I think I would have to touch on it because it contains very key points that I want to speak on. Before I start, Sunbed Global Concepts is an agro-commodities trading business that commenced operations in 2017 out of Nigeria. Till date, we've exported over 200,000 metric tons of cocoa and then cashew and soy out of Nigeria into the global markets. We've expanded operations also to Ghana and Cameroon, where we commenced trading. We commenced Q4 last year. And then this year, 2026, we expect to export about 15,000 metric tons each out of Ghana and Cameroon, while exporting 70,000 metric tons out of Nigeria. And to speak to processing, we know that there's been challenges around processing in Nigeria especially, a lot of unutilized capacity, but we understand the challenges that drive that process. In Nigeria today, you see shiny factories, processing plants, but to feed that plant, you need stock, cocoa. And the guys that are buying that cocoa are also competing with traders like us that export to global markets. So there's that needs to be taken care of and handled. Apart from that, like very well mentioned, there's need for working capital. That is extremely important. So you've spent $50 million, $70 million building a cocoa processing plant, 30,000 metric tons, 50,000 metric tons, but you are struggling to get working capital to finance it. And then most banks in Nigeria today do not really understand that space. You mentioned EcoBank. EcoBank doesn't understand that space. It's the banks that we've worked with, we've had to do a lot of teaching them the space. And I think we made some progress, but it really is continuous work for us. Leadership, by example, requires a lot of work, and we are willing to put in the work to ensure that financiers in Nigeria, Africa, and to an extent globally really understand how the cocoa space works in Nigeria. That said, I'll go to my speech. Distinguished guests, industry leaders, financial partners, regulators, investors, and fellow stakeholders in the cocoa value chain, I greet you a very good morning. It's an honor and a privilege to stand before you today at this forum to speak on a topic that is very dear to our hearts, which is financing Africa's cocoa flows. Because Sunbet is growing from a Nigerian entity to become a Pan-African company. Cocoa is more than a commodity for us in Africa. It's livelihood. It's foreign exchange. It's economic stability. And really, cocoa in Africa, and in Nigeria especially, is generational prosperity. It is one of the few sectors where the continent commands global relevance as a driver. We've said numerous times today that Africa produces about 70% of the world's cocoa. So that's very commendable for Africa. Yet, despite this importance, the financing architecture that supports cocoa trade in Africa is really fragile. And it's often misaligned with the realities on ground. For too long, the conversations have centered around offshore capital and pre-export finance structures led by international lenders and foreign banks. While these instruments remain important, they cannot be the only answer to a continent seeking true economic resilience. We'll need local participation, and we'll need it now. At Sunbet, we believe that the future of cocoa finance in Africa must be built on a stronger foundation of domestic capital mobilization. And because of this, 2 months ago, we came into the capital markets in Nigeria for the first time, and we raised a commercial paper. We got over $100 million, about 150 billion naira. And it was really a testament to the fact that that market can be tapped. And there's a lot of liquidity in the system which we can harness if we know the market trusts you and you can get market acceptance, which we think Sunbet has done gladly. Domestic capital creates ownership. It improves speed. It enhances flexibility. We currently have a DFI funding that took almost 1 year to get. That's not speed. And that really is because most of the DFIs, well, some already are now having African presence, Nigerian presence, but most of them need to be on ground. I just came back from a roadshow where I met about 5 DFIs across Europe. I came back this last week. And it was clear that an average process to get funding from DFI to unlock funding takes about 6 to 9 months. That's not speed. It needs to be better. Because if it's not that, if it doesn't get better, Africa needs to now take charge of their financing. In Nigeria, where we operate extensively, pre-export financing has followed familiar structures. I had a lot of talk about warehouse receipts. In Africa today, or in Nigeria today, most of the banks, local banks that finance us, we use collateral managers. And it's similar to the warehouse receipts, really. And it's a system that has worked for us. And really, before this year, where we got capital market funding, we had largely relied on domestic banks to fund us through warehouse financing. So the markets are suppliers because of our brand in the market. More often than not, they supply us to the warehouses. And we have collateral managers, even before payments. And we have collateral managers that come to the warehouse, of course, backed by the banks. These collateral managers count the stock, ensure the quantity and quality of the stock, and issue a warrant. And on the back of that warrant, our domestic banks fund. But we need to get more banks to do this. The banks, the international banks that exist in Nigeria, most of them do not participate in this structure. That needs to change. In Nigeria today, most of our funding and our support have come from domestic banks. This conference is a very nice forum, but things need to happen after this conference. We need to see improvement in international funding of processors, traders in Africa. Sunbirth understands that to retain value, you need to move further down the last mile. And we've currently commenced building a 70,000 metric ton capacity warehouse processing plant for cocoa. We're starting, it's going to be in 2 phases, 35,000 metric tons, currently ongoing at Shagamu, southwest Nigeria. We've gotten approval in principle from the DFI to support this process, but it's taken us 3 years to do this. Thankfully, we're at the last mile, and we expect to come on stream with our cocoa, cake, butter, and liquor by Q3 2027. And I'm sure that this would add, maybe by next year's conference, we'll see Nigeria on the map. The real question here is, how do we make African capital work harder for African commodities? I think there are 3 priorities here. The first is that we must improve risk visibility. What I've come to realize is that investors do not fear agricultural products or commodity trading. What they fear is opacity. So traders must become more transparent. We got rated, and the process of coming to the capital markets for us at Sunbirth helped our transparency process. We got rated by GCR, Data Pro. Currently, we are doing the rating renewal, and we've gotten Augusto and a couple other rating agencies to rate us. I think this is important because you need to improve visibility, strong governance, traceability, compliance discipline, and transparent reporting are no more optional. They are important because financing will follow structure and governance. Secondly, we must create smarter blended financing structures. There's really room for DFIs, commercial banks, pension-backed funds, and private investors to coexist within the ecosystem. Guarantees, first loss mechanisms, structured risk-sharing models can unlock more financing at domestic levels. And thirdly, we must finance beyond exports. The financing requirements to improve processing or to make processing in Nigeria significant cannot be handled alone by domestic banks. Domestic banks usually shy away from long-tenured financing, especially when it comes to manufacturing in the agri space. So this is where the international funding community comes in. It's taken us about 3 years to get funding for our cocoa processing plants. We have plans to build a cash processing plant and a soy processing plant. How long will this take us? These things need to change. For cocoa, the strongest economies won't be the ones in the future that export the fastest. They'll be the ones that retain the most value. And at Sunbirth, that's really where we're driving towards. Through our sustainability commitments, our regional expansion strategy, our push towards local processing, we are building a model that sees finance not as a transaction, but as an enabler of long-term ecosystem value. To investors in this room, I would say that Africa's cocoa sector is not a high-risk story. It's a high-potential story that demands better designed participation. The returns are here. The scale is here. The demand is here. What we need really is confidence, context, commitment, and of course, speed. To regulators and policymakers, I would say support the institutions that support trade, enable capital efficiency, reward value addition, and create frameworks that encourage local financing instead of penalizing it. To operators and exporters like myself, I would say we need to stop seeing financing as something to chase and begin to build businesses that are worthy of capital attraction. The responsibility is shared. The opportunity is collective. The future is ours to structure. Africa supplies the world with cocoa. It is time for Africa to begin to determine how this cocoa is financed. And at Sunbirth, we are proud to be part of that shift. Not just as participants, but as builders of a stronger financial culture for the industry. During the panel session, I'll elaborate more on some of these points, and I'm happy to take questions and really share our perspective further. Thank you.
Since Sunbirth came, we gained a lot in our community.
Ọkàn mi balẹ̀ lérí oko mi.
Bí a ṣe ń ṣe kòkó tẹ́lẹ̀ pé ó yàtọ̀ sí bí wọ́n ṣe tún wá kọ́ wa ní àsìkò tá a wà yìí.
Getting into the cocoa business is just God's will and God's plan for me. Prior to that, I didn't want to do it. I had other plans, and the biggest thing that made me do the business was trying to create a solution for my dad's business.
2017-2018, my branch manager, Osage Binige, called me and that he would like me to join him for a call in Akure to see a prospect. He said, well, their plan is to go into commodity exports. And I said, okay, that's fine. I mean, his fidelity is very big when it comes to supporting export, particularly non-oil exports.
I won't say at the get-go I knew what I wanted to do. The more I understand the business, the more I feel I know what I can do more. I know what I can give more. I know the talent I need to recruit. And now the vision for us now is clear.
Since we deal in global business, we have standards that guide us, and we don't joke with quality because quality is what stands us out in the market.
For us, we continue to represent the country in trades outside Nigeria, and we continue to be very innovative to show that trades can be done in a very structured way, and we continue to enhance our own business reputation and enhance the country's reputation by delivering quality crops anywhere we supply goods to.
Nǹkan tó ṣe kókó lára nǹkan tá à ń wò ni pé quality kòkó gbúdọ̀ dá, ó gbúdọ̀ bá standard mu because wọ́n máa wo mòdè, wọ́n máa wo bí wọ́n ìtẹ̀, sọ́dẹ̀ máa wo bí quality ẹ̀ ṣe rí, ṣé quality tó lè bá export mu ni because a nífẹ̀ẹ́ nǹkan tẹ́ pé àwọn náà máa ta òkú fún wọn táwọn náà tán nílé rí ta because táwọn náà nílé make profit on it.
We have a dedicated team, the quality control department dedicated, and we have our field operations officers too that actually know and have good knowledge of what we need at any point in time. And they know how to sensitize the suppliers too, so that whatever that is coming in is of high quality standard.
Here in Sunbelt, it's a grant where you can grow. It's a career growth grant.
No, I don't have any. And
for me, I always say for people to even give you money to do trades, it's just God helping you because they don't have to give you. And for me, I'm grateful for all the opportunities God has brought our way, excellent partners here and there, mentors, the people that chose to join the board of the company that we run today, the employees that even decided to leave stable businesses to come join us when we were building. So I'm just thankful to God for just making it easy to be done. In spite of all issues, God is still keeping us strong.
Thank you, Mr. Nisobi. That's the conversation we needed, and it's good we have the largest cocoa giant in the room from Ivory Coast, so Nigeria is coming to take over and be number one from 5th place. Okay, so our second panel turns to the most pressing financing question in Africa cocoa today: pre-export liquidity, long-term capital, and the role of sustainable and ESG-linked financing models. Moderating will be Mumbi Gitsau, soft commodities reporter at Bloomberg. A round of applause for her as she makes up the stage. Joining her is Dr. Ransford Abe, the Chief Executive Officer of Cocoa Board. Hajia Maria Adamu, Managing Director of Federal Commodities PLC. And Unzube Chukwu Anisobi of Sunbelt. Mumbi, over to you.
Thank you all for joining us and a lovely panel here with me. So I look forward to the next 30 or 40 minutes of our discussion. And I think we've really been started off very well. At first, he started with saying we just need domestic financing, and I was thinking, oh my God, we're in London. Should we maybe move this conversation to Nigeria? But thank God you came full circle and you said we need everyone on board. So happy about that. Shall we first start off with Cocoa Board? I think we have had a challenging start. As you took office, you really walked into the mine and it was either you sink or swim. I think by now probably you're still swimming, but take us through what the financing issue was and how that has evolved to now. You pushed back on the syndicated loan, now we're on an off-taker-led financing. How is that going?
Well, thank you very much for the opportunity. And basically, I mean, Cocoa Board will be 90 next year. And we actually started financing the crop with budgetary support from government. So that's how it was started. But as the yields grew and the prices went up, it was not sustainable. And that is where 34 years ago, the issue of the syndicated loan model came up, where we had to rely on offshore funding for the crop. So you basically use the crop as a collateral to get the funding from these international and financial institutions. At that point, it made a lot of sense and was helpful. Of course, it's something that we did for 32 years before it collapsed. And it was also, it meant that you had a minimum of about 70% in some cases. If you look at the 23-24 crop season, you had 92% of the crop collateralized in order to secure this funding. The local processors and local companies could not. I mean, their contracts were not acceptable under this model. And so what it meant was that you were virtually given between 70 and 92% of your raw beans as collateral to international buyers in order to secure this funding. That also meant that once your processing capacity grew from 1991, where you probably needed less than 150,000 tons for your local processing, to a period where you needed about 500,000 tons to meet the capacity of your local processing plants, you had a problem because you were actually collateralizing most of your raw beans. And I said, like in 23, 24, 92%. So what was then left for local processors? You know, you sometimes look at the data and it looks like local processing was doing better. But what was actually happening was that you now had international buyers like Olam, Barry, Cargill, who will buy, sign those contracts as international participants. And when it's time to deliver, they then ask you to deliver to their local plants. So when you look at the local processing data, you might think that you were doing well, but in fact, you were not doing that well. So that then collapsed in the 23-24 season. So in 24-25, then we had to come up with this buyer-led model where we now needed to rely on the buyers to now fund the financing of the crop. So when we came in, we realized that that was not sustainable because what it meant was that you were shifting the financing cost to the buyer. But this occurred at a time when you had a global shortage of the bean. Between Ghana and Cote d'Ivoire alone, there was a shortage of about 500,000 tons. And so everybody was desperate to get a crop. So you could then take advantage of the buyers. But we knew that it wasn't sustainable. So there was a need to look for a new funding model that we believe could be sustainable and also ensure that we're able to optimize local processing capacity. So that is when we started working on the new funding model for the crop. And then in 25-26, we all know what has happened to the prices on the market. So we're hoping that 26-27, with the 26-27 season, we'll be able to come up with start a new financing model, which will be a domestic fundraising model. We're actually going to come up with commercial notes.
Before we look to the next season, shall I bring in the FedCom managing director, who may shed some light on what the financing model meant for LBCs, especially if you did not have an off-taker abroad that could finance everything. What did that mean for the local LBCs?
Thank you very much. So Federated Commodities is a licensed buying company, one of the leading indigenous LBCs. And on average, we do about 60 to 70,000 metric tons on a yearly basis. So our need in terms of working capital is very significant. So just to put the two systems into perspective, in the past, we were working with the support of Cocoa Board. So when Cocoa Board goes for the syndication, they give some of the funds to the LBCs. So in a way, about 50% of our working capital requirement would be supported by Cocoa Board. And at the same time, too, when we bring invoices, because there was no need for you to look for buyers, Cocoa Board was doing all the work. So all we needed to do is to just bring it to Cocoa Board, and they paid us our invoices based on the syndicated funding that they had. So it was very smooth. You know, obviously with the challenges that led to the changes in terms of the system. Now, the problem that LBCs had was two-front. One, the prices of cocoa were going high, and then two, the syndication also had stopped. So how do we replace that significant amount of the 50% that Cocoa Board was supporting us? So thanks to the system, the changes that came about with the clients now being involved, it was, in a way, really a quick way to support us, because then at that time, as CE said, the clients needed the cocoa badly. So they were ready to really give us the necessary support. So in the system, what we do is that the first year, it was like a 60-40 system, where 60% of whatever you buy, the clients, when you buy, some of them even pre-finance you. And COCOBOD has made it easy for that pre-financing to come through COCOBOD, just like the way the syndication was going. Under the syndication, you just give, you look for a bank guarantee. And even here, they made it a bit more flexible by asking us to even bringing insurance guarantees to support the funding that was being. So in a way, the client's money was being guaranteed by COCOBOD through this, under the insurance that we're also bringing to COCOBOD. So then the clients would give us pre-financing through COCOBOD, and then secondly, pay 60% when you bring the cocoa. And because they give them warehouses, these clients are able to get pre-financing support as well from their banks, and a sort of collateral management. And then, so because a lot of them also had to increase their working capital to support, because this was the first time they were doing also that for the LBCs. So through that, we were able to increase our working capital. And then at the same time, because what they were giving us was about, let's say, 30 to 40% of our requirement, we still needed to get additional funding from the banks. So when we went to, for what we had to do was that, first of all, there are a couple of limitations. You have to always, traditional banking, if they can't do collateral management, because handling the stocks at on the field was going to be very difficult. Yeah. The only thing the banks would be able to take would be the normal, traditional assets, tangible assets that they can have hold of. But then what was happening, because the banks were willing to support, and so we had to come up with them to find new solutions to really make it more possible for them to increase our working capital. And so one of the things that happened for the first time, at least from what I know in the industry, was that the banks now, we were ready, or finally were able to accept us to bring insurance guarantee, credit guarantee, as a part of our collateral, to give room for more facilities, for the LBCs. That was really something that helped us a lot, and because you couldn't have doubled your assets to give to the banks, and you needed twice your working capital of the previous years because of the way the prices had increased.
FEDCO is a significant LBC, very distinguished. I think it's one of the first ones I had interactions with when I visited the Origins. But what about the smaller LBCs? Yes, what was the challenge for them?
Yes. So then the second thing, just to conclude on our side, is to also go to the Ghana fixed income exchange, which is on the stock market, to also raise a capital commercial paper. That was also a first in Ghana and on the stock exchange. So it made things really smoother for us to be able to have enough money. But one of the things that the other smaller LBCs challenges was that if you didn't have buyers, then you have to rely on COCOBOD for COCOBOD to take over, because COCOBODs cannot reject any cocoa coming to them. Whether you have a client or you don't have a client, the cocoa would come and they will take over, and they will have to find a way to sell the cocoa. And this is really the biggest advantage we have. Even if we're a smaller LBC, you will be able to send your cocoa, but then how do you finance it? And, it always starts with your credibility. So most of the time, you see LBCs start with a small volume. Year one, maybe you do 2,000. That one you support with your normal internal resources that you have, which comes with the minimum that COCOBOD normally asks is 500 tons, I think, in a year. So then you increase it, your credibility gradually. Once you're able to increase it, the banks are able to look at your past records and then give you more facility. So access to the clients was not really, it was a challenge, yes, because you are not, especially when sometimes the 80% doesn't come, that it's a limitation for the smaller LBCs, because truly you need to have that to be able to unlock the funds quickly. So there was more of a delay in terms of payment
that would go to them, because then Cocoa Board will have to sell that and then pay them. But meanwhile, if you have a trader working with you, which initially was 60-40 and became 80-20, so it means that immediately you bring the stocks, 80% of your money is being paid to you by the client. And sometimes you work a lot with them, so they know the cocoa has come, they've taken over, and then they immediately work with CMC to prepare an invoice and then pay us. So if you are not in that situation, then you definitely will have a challenge. Being able to have, your turnaround time would be critical in that case.
Before I come back to my farthest left, I'll come back to you, CEO. In terms of the financing gaps that were there, I think now we have turned the off-takers into some form of banking and financiers. Is there a way where you can go back to the banks who are currently in this room so that they know what's their place in the new funding model?
So first of all, just to touch a bit on what she said, when you have the current financing model, where you now depend on the off-takers to fund the crop, if you have a situation where LBCs, without any contracts from off-takers, go get the beans from the farmers on credit, and they bring them to Cocoa Board through CMC, and you're unable to have off-takers, then that creates a big problem for Cocoa Board, because Cocoa Board is not in a position to fund those crops. Now, when you have a situation where those beans were bought from the farmers on credit at a time when the prices were, say, 5,000, and then you have a situation where at the time that they are able to get off-takers, the prices have reduced to 3,000. But these farmers must be paid that 5,000. What then happens? So that then leads to serious under-recoveries on the part of Cocoa Board. And that is why you would have heard already in the news, farmers complaining that their owed monies,
they've not been paid.
LBCs have not been paid monies and all that, because if you had an off-taker before you purchase the crop, we will not have a problem, because that agreement or contract would have been signed at a time that aligns with the price that you were paying the farmer.
But are you leaving the burden of getting an off-taker to the LBC?
No, but the point we're making is that it is a collaboration between both of us. Some of them have the capacity, to work there. They've been working with the off-takers. But I'm saying that if you do not have an off-taker ready to take your product, and don't forget that Ghana is not the only producer of cocoa. So the off-takers are dealing with many markets. Yes, we have premium cocoa, but they are dealing with many markets. And then everybody is also reading the market. So this is also a part of the downside of this current financing model. And I'm just illustrating this point to demonstrate why there's a critical need to look at a more sustainable financing model beyond the syndicated loan system that went on for 32 years and did not really support local processing. And then this current one, which is in its second year, which has these downsides. And that is why we've had to look at the new funding model, which we are looking at putting in place for the 26-27 crop season.
As we are forward looking, let's go into the 26-27.
All right.
Breaking news, guys.
So we are looking at a funding model that, one, does not oblige us to collateralize virtually all our beans to foreign off-takers. Two, we're also looking at a funding model that takes advantage of the current economic climate in Ghana, where interest rates have gone down, and also the fact that we think that there is liquidity capacity for the funding of this crop. And we can also ensure that local companies can even sign contracts with Cocoa Board. Under the syndication, those contracts were not acceptable. So they only had to rely on the remainder of the crop that has not been collateralized, to be given to them by Cocoa Board. And as you move from 70 to 80 to 92, that space became very little for the local guys to participate in. And so we're looking at issuing commercial papers or commercial notes to fund the crop. And that is what we intend doing from the 26-27 season.
For the entirety of the crop?
Yes, for the entirety of the crop.
Okay. Anyone who's willing to buy, put in your bids now. Let's go to Nigeria, who's probably been watching from the sidelines what's been happening in Ghana. What stands out for you in their system, and what do you think Nigeria could provide as a landing point for them?
Okay, thank you. So I think what stands out in the entire Ghana cocoa governance is the premium quality of the cocoa, right? And literally because they put in place a standard, right? So from the farm gate, the quality is guaranteed. In Nigeria, it's a bit different. When we get cocoa from our local buying agents, we need to test for quality and do some stuff, some work on it, right? And because Nigeria is fragmented, each exporter has to have a quality control department, right? We have a quality control department of about 30 staff, and we have them in each of our warehouses. So our warehouses in southwest Nigeria, we have them. Our warehouses that are close to the port, we have them there. Our warehouses in Ikom, close Cameroon, we have them there. So this is something that we have to do ourselves. And as such, Nigeria's cocoa cannot command the premium that Ghana's cocoa commands because exporters like us have to do it yourself, and then it's not standardized across the country. I think that's one thing that Nigeria needs to learn from Ghana. But apart from that, the whole price fixing system has pros and cons.
That's a subject.
Yeah, exactly. So, but I think for us in Nigeria, it's we've gotten used to our system in the sense that the local buying agents and the farmers know the international prices. So as prices move, everybody adjusts their prices and adjusts their expectations, right? Unlike Ghana, where it's fixed, really. So fixed for a season. If it goes down, it's cocoa bud's headache, right? So I think these are the differences between Nigeria and Ghana.
And that's a really good segue into my question. As we entered December, I don't think anyone anticipated the collapse that would come in the cocoa market. Anytime I went to my desk and I saw 7% down, 8% down, 10%, I mean, the volatility in the cocoa market, it's something that astounds everyone. And I think at this point, traders have gotten used to it. Now, when was it yesterday? London opened 16% higher, and you're like, okay, it's a normal day in the market. Previously, we would have to send a headline to say cocoa prices have surged 10%, hit biggest jump since 1989. I guess now you're used to that. But maybe that's the kind of volatility that investors look like, and they're like, I think we want to take a step back. Now your model presents an even bigger challenge where prices at the farm gate take time before they match up to the prices on the terminal market. And I know we do have the African exchange that we are talking about that will probably, if implemented, will smooth out that discrepancy. But to my question, how do you ensure that liquidity is available to the exporters and to the LBCs when it's unclear what financial commitments they need to be making?
Well, first of all, just a bit on where my brother left off. You know, when we're talking about a new funding model, we also realized that we needed to come up with a new pricing mechanism. Okay. Because there were two things with the Ghanaian experience. One is a situation where the prices go up on the market and the farmers don't get to benefit. And then you have a situation where, because historically prices are not reduced, the prices tank on the international market and the prices remain the same. And then you have a lot of under recoveries as far as cocoa board is concerned. And so we needed a pricing mechanism that, one, ensures some stability for the farmer, but two, also ensures that there is some review at some point in time to reflect the trends in the market. And so we are looking at a pricing mechanism. For example, my government has promised the farmer 70%. And that is what was instituted in the 25-26 season, that the farmer gets 70% of the declared FOB. So what it means is that we now come with a new pricing mechanism, which is part of the new Cocoa Board Act, which will go before Parliament when Parliament resumes, is that the farmer gets 70% of the declared FOB. You have, for example, maybe a quarterly review of the prices, because there are two things that make up for the FOB, really, two key things. So you look at the world market price and you look at the exchange rate. So these two determine, and in Ghana, in the last 2 years, both have hit us. You have a situation where, as a result of improvement in the management of the economy, You have the cedi that was exchanging for over 16 cedis to $1, exchanging for as low as 10.25 to $1, which tells you that you're losing about maybe 5 cedis on every dollar. That obviously then affects, in cedi terms, how much earnings both cocoa board and the cocoa farmer and all other stakeholders get. Then you have the twin problem of the prices also tanking. So now you have the cedi strengthening against the dollar, and then you have the world market prices dropping. So this then, when you put them together, it means that you have loss in terms of the revenues to both cocoa board and all stakeholders, including the Ghanaian farmer. And so the new funding model is also coming up with a new pricing mechanism, which ensures that we'll periodically review. It could be a quarter. Like I'm saying, there's also the element of stability for the farmer. So the farmer has to be certain. So you need to have that in place. Now, to ensure the funding for the LBCs and others, I said that we're looking at going to raise commercial notes. And we've done the study, and we believe that there is enough funding available. In fact, the pension funds alone are sitting on over 150 million USD in Ghana. So we believe that there is that capacity. We believe that the interest rates in Ghana now are at the right places for us to go into the market and to look at this funding. And we are looking at funding the entire crop. And so we do not believe that the LBC should have too much of a problem once this is institutionalized, or once it takes effect from the next crop season. We should be able, once we go through all these things, we are at a point where we are going through the procurement processes for the fund managers and transaction advisors and everything. And we hope that we'll be able to finish all of this and have the roadshow, the prospectus and everything, and make sure that we have the funding in place before we open the 26-27 season.
Well, we are, a few months to the 26-27 season, yes. So maybe 4 or 5 months to go for everything to be set up. How confident are you about the new funding mechanism? Well,
I think it's still new for us, and there are more details for us to understand. But for me, as an LBC, as I said, the working capital is critical. So if Cocoa Board is able to raise the funding, definitely it will help us a lot, because then we know that with Cocoa Board's capacity, and then with looking at where we are on interest rates, we can only get it at a better pricing. And, whatever it is, we know that there would be the need for us to also prepare, and have our own working capital to support whatever is coming. So we will be working. Definitely there are certain maybe clarities that need to come, especially for the traders we work with, so that they also, are well prepared, and we need to know the type of arrangement we will do with them. Because if this model is coming, it's possible that then there wouldn't be the need for the traders to even bring in any pre-financing or to think about the 80-20 arrangement. Whether it's going to be a part of it or not, I think there would be more details for us to really get to understand. But for me, as an LBC, I think I would just have to continue to work with the understanding that there would be some support from Cocoa Board, and they would still need on our side to do whatever we need to do to support the working capital that is required. There are some few things we are looking at, which we believe that maybe together with Cocoa Board, it can even strengthen the liquidity process that we are all trying to, to achieve. So we in a way, traditionally with our traditional bank, we can say we are ready, we are okay. But then we need to know what comes in, whether it is Cocoa Board, to what extent, is it going to be the traditional seed fund support of 50% of my working capital? Is it going to be 80%? Is it going to be 20%? I need to know the gap that I'll have to.
Are you able to answer that question for us? So that, we have clarity as we go.
We would have the stakeholder engagements, and those details will be dealt with. Yes.
Okay, I was trying to get an easy answer for you.
Perfect for me.
We'll try during the coffee break. Going on to Nzube Kuchuko, you talked about speed, and I think what we rarely talk about is the risk management that also involves pre-export liquidity in terms of if you're buying cocoa and being able to hedge that, but also that also comes with margin calls. And you talked about speed and loans taking 6 to 9 months for you to get them. How can we address the issue of speed? Because I don't think the brokerage will give you 6 to 9 months to meet your margin calls. If anything, it's to the end of the day.
Okay, so for speed, it's in 2 ways. And there are 2 types of funding here. There's a funding for trading. There's a funding for processing. For trading, monies need to come. You need, from the point of application or request for the funding to the point of disbursement, needs to happen in 2-3 weeks, really. Because you have contracts that you need to fulfill. At Sunbed, we're in the margin business, so we don't buy cocoa and stock in our warehouses. We don't buy for the fun of buying cocoa, right? We don't speculate. So for trading, it's best really to work with, while working with the banks that understand you, right? You now begin the relationships with the banks that don't understand you yet. And like I mentioned, currently we have a DFI that gave us trade finance, but it took a while. But we've gotten it now, and at both ends, there were lessons that were learned. Right? But at our end, this is what not to do next time when dealing with another DFI. Right? And both at DFI's end, they probably understand the structure better, and will take that learning to deal with another DFI and make another exporter and make the process faster. So I think it's just people need to take time to understand businesses. That is what DFIs need to do more in Africa, understand the business. I know a couple of DFIs have been set up offices in Lagos. I know EBRD, FMO, most of them already have offices in Lagos, which is a very good thing because it brings them closer to the market, it brings them closer to the operations, and then it really isn't just one guy sitting in London or Brussels that is determining, that's a checklist and ticking off stuff that doesn't work for everybody. Okay. So now that's for the trading bit. For the processing bit, there's a lot. I think the longest part of it is the due diligence part, and it cuts across environmental and the ESG part, technical, legal, and the financial. That takes time. So it's understandable, but at that point, what needs to happen is that 9 months is a lot. If it's 6 months, it's still fair, but eventually, the more they deal with these countries, with our countries, Nigeria and other countries in Africa, the better they understand the process, and the more they can give feedback and take the learnings from each closed transaction to improve their processes at their end also. We currently had one 2 months ago that we had to sit with the guys and I told them that this requirement is not realistic. It doesn't work. Yeah. I'm trying to set up a processing plant and you're asking me for confirmed of the contracts. It doesn't work. But there's probably someone that's giving them that check, put it in that checklist, and doesn't need to tick the box. So that gap in understanding has to be bridged. Yeah. And it will be bridged by getting closer to the origins. Yeah. And then also by closing more transactions. If you close more transactions, you understand the process is better.
I agree. Come to the origins, study the supply chain, study how it happens, because how we do things in London could be totally different to how we do things in Nigeria. I think of my home country, Kenya, and the way we run businesses in Kenya, let me not speak to it. But if you ask me for a checklist of how I run my business in Kenya, I may not meet half the requirements the investor here might want me to reach. Now, Aisha is a very strict MC. She's just whispering in my ear. Mind you, I have no earpiece. That I have 10 minutes to go. Did you say? Yes. Okay. And that was like 15 minutes ago. Apologies. Maybe to our final question, there are investors in the room, and they've probably heard you talk about commercial papers, and they're thinking, okay, so where do I fit in? How do I fit in as a bank in this? How can they play a role, not just in the short term, but also in the long term?
I guess that I don't need to jump the gun. Once we have the transaction advisors coming on board, I'd like to wait a bit. It will not take too long a time. The prospectus will be out. There will be clear guidelines, clear information with respect to how anybody can participate. But what I can tell you is that this will be CD denominated. They'll be CD denominated. That's one I can tell you.
You had it here first.
Okay. Yes. For us,
I think there is a lot of room for the DFIs. And we've seen a lot of interest as well, and the whole thing is that there were two main issues. One is that how do you, when you fund to the LBCs, especially the LBCs work with, we have, it's CD dominated. So everything we do, we have to do it in the local currency. So you give me dollars, how do I get your dollars back? So you have to hedge. And when you hedge, the hedging cost is very expensive. So then it makes it unattractive. So a lot of times when we are working, we want to work with the DFIs, or they want to also work with the LBCs. The challenge has always been that they have to go through local banks to be able to get, and then it becomes more expensive, and then the local banks are like, okay, if you need just $10 million, $20 million, we can do that for you. And if you look at the cost, then you end up not really going for that. So one way we are, and this one I'm just saying it without having to discuss prior to Doctor, but I think there is a way we could look at or consider how the DFIs can channel the LBC's money directly through Cocoa Board or through CMC, just like the way we do with the traders. That can be linked to
act like some sort of guarantor,
so that you avoid the hedging cost, because that is the most expensive thing, when it comes to working with DFIs. And the good thing with Ghana is that we have incorporated ESG in a lot of things that we do. So banks are very comfortable working with LBCs in Ghana. We've had, just recently, IFC, I don't know whether you've heard about it, IFC has supported local LBCs. If IFC can approve local LBCs, it means that we've gone through a lot of ESG, we've ticked a lot of boxes when it comes to the ESGs. So we really don't have, especially when we are doing the EUDR and all those things, we don't have too many problems getting approval. The main thing really is to see how that can be done by trying to avoid the hedging costs. If we're able to do that, I think there will be more room for more of the DFIs to come on.
I've seen Wahab take notes.
We can have a meeting in the next 30 minutes.
And Wahab is also taking notes. The final point, your final remark before Aisha drags me out of the stage.
So I think for us, it's just to ensure that we get international banks closer to the origin communities, closer to the traders, closer to the source. I think it's going to be a win-win for everybody. Both for the origin communities, we get access to cheaper funding, and then for the banks, you get outlets to deploy the capital that you've been sitting on and actually fund actual transformative projects. Thank you.
Thank you very much. Do you have time for questions? At least one or two. Shall we give the mic to the gentleman here?
Yeah, I think probably I'm loud enough. I'm Wahid Kassir. I'm the founder of First Islamic Bank in UK. I think all the issues and the challenges that you highlighted, Islamic finance can provide you, quite good solutions for that. And I think whether you talk about hedging and all that, that goes out the window. So I think probably we can talk on one-to-one basis, and I can probably not guide you, but make some suggestions to you.
See, that was a business card. So let's get a question. I think a mic is coming to you. Could we kindly pass that quickly so that we can all hear him? Name and question. Into the question.
Yeah, so my name is Kwame. I mean, it's nice that we are coming up with different financial models, and I'm looking forward to wherever we can find that information, because there's a reputation that no information is put out there, and then all that we hear is that something has been implemented. But then from the discussion, I realized that none of the prerequisites towards all these were focused on the issues farmers are facing. The current financial model had a cocoa stabilization fund, which wasn't also mentioned, that was supposed to support farmers in times of this turbulence. And then the fund was funded from the deductions that Cocoa Board was making from the sales of the beans. So at what point did the farmer have to pay the price that they have already paid to insure them against some of these shortfalls, and that your administration have to cut down on the cost when it came to that? And I've realized that every single issue, discussion going on here has nothing to do with the farmer. Everybody's talking about how LBCs can get their financing, how Cocoa Board can get everything and all of that. But the farmer have had to pay the price for something you've already deducted money from it.
I understand your passionate appeal for the farmers.
Exactly. So I want that bit to be talked about. How was the cocoa stabilization fund managed?
So your question is on the stabilization fund.
Yeah, how was it managed?
Let's end it there. And the answer will be very quick, and because this is not particularly for that reason, let's just get to the answer.
Well, first of all, I have stated here that the current government of the Republic of Ghana promised to pay the farmer 70% of the declared FOB. It's something which is unprecedented, and it was instituted. Even in this current crisis, what the farmer is being paid initially was 90%. Now it is more than 100% of what the value is. And so it is not true that the issue of the farmer is not being highlighted. That's one. Two, in terms of the stabilization fund, we took over, there was nothing in the stabilization fund. You all know that the Ghanaian farmer, and it's something that I've said many times, I even said at ICE last year, that because of the rollover contracts, those 333,000 tons of cocoa that were sold for $2,600. So even when prices went as high as $10,000, we're using the $10,000 cocoa to service this $2,600 rolled over contracts. And so it's a shame that not just the farmer, but all stakeholders could not benefit from that boom. So that is the reality. These are the facts. But to guarantee 70% of the farmer is good. And in the new Cocoa Board Act that is coming, you would see the stabilization fund, and we're going to ensure that anytime the price goes beyond a certain level, we can set aside some money and put in this stabilization fund, so that if we have a situation like what we are faced with now, you can look at falling on that fund to cushion the farmer and other stakeholders. But it didn't exist. There was nothing before we came in. We could not have created something. We could only have put in the processes to create a situation where we would not have a recurrence of what happened in the past.
Thank you very much. Final one before, we all get arrested.
No, because just to clarify, all this funding we are looking for is for the farmer. Today, farmers are complaining they are not being paid because there is a liquidity crisis. So if we are looking for funding, it's because we want to have as much money to be able to service the farmers as quickly as possible. So everything we are doing here is really rather for the farmers, not just for LBCs. So I just want to clarify this point.
There is the assurance that we are keeping the farmer front and center. Thank you very much.
Distinguished guests, ladies and gentlemen, I'm John Kufuor, the former president of the Republic of Ghana. It is with much regret that I'm unable to join you in person. I however warmly acknowledge all of you gathered at the London Stock Exchange and the many participants joining remotely across Africa and the world. It gives me great pleasure and honor to be associated with the Africa Cocoa Finance and Investment Forum and this particular maiden forum, and to offer this keynote address. I acknowledge that the audience assembled for this forum represents a strategic part of the architecture of Africa's cocoa economy. Participants, hopefully, are global cocoa value chain stakeholders committed to advancing sustainable financing and long-term investment in Africa's cocoa economy. Ladies and gentlemen, I wish to address the forum not only as a former head of state, but also as a cocoa farmer myself, who understands the realities of production of this bean, which was appropriately and historically named by the Incas of South America, its original home, as the food of the gods. As a president, I personally superintended one of the most transformative periods of Ghana's cocoa industry, with yields doubling from about 350,000 tons annually to over 750,000 tons in a matter of 3 years, at the beginning of my stewardship of the country in the years 2001 to 2004. And 750,000 tons was all-time record since the 1920s in the country. As you know, Ghana is still a cocoa monocrop economy and has been over the past 100 years. Indeed, my engagement with cocoa-producing countries across Africa over many decades has reinforced my central conviction that Africa's cocoa future must be shaped collectively and strategically, and with a long-term vision that transcends political cycles. I have to emphasize that this Africa Cocoa Finance and Investment Forum 2026 is being convened not only at a time of extraordinary opportunity, but also of deep structural imbalance in Africa's cocoa economy. It is my understanding that this inaugural high-level platform is dedicated to positioning Africa's cocoa sector as a strategic, competitive destination for global financing, investment, industrialization, and long-term value creation. Its main purpose is to address the long-standing imbalance and disconnect, which is, while Africa produces the bulk of cocoa beans in the world, decisions about capital, industrial scaling, and value addition, and its equitable apportioning have historically been made and carried out outside of the continent without much of the continent's input. This imbalance is stark. Today, the global chocolate and confectionery industry exceeds United States dollars 150 billion in annual value. Yet Africa, despite producing approximately 70% of the total world's cocoa beans, accounts for less than 20% of global cocoa processing and less than 2% of the world's finished chocolate output, with a share of the revenue not much above 12 billion United States dollars. Thus, the agricultural producers of the cocoa beans get only about 10% of the value chain, while the 90% goes to those who do not do the onerous nitty-gritty job of farming to produce the beans. The reality of the industry is that the true economic value lies in the cocoa manufacturing, chocolate manufacturing, branding, innovation, and long-term capital deployment. It is my understanding that it is precisely this gap that the forum seeks to confront, and I highly commend the originators and organizers for this laudable initiative. It brings producer country institutions, regulators, policymakers, financiers, investors, processors, manufacturers, innovators, and development partners together into a single strategic conversation focused on capital mobilization, market structure, and industrial transformation beyond and including production. Indeed, this is one of the clearest African-led calls that I have seen for a forum that explicitly prioritizes finance and investment as the engine of cocoa transformation, and it surely sits fittingly within the emerging Africa Cocoa Vision 2040. Ladies and gentlemen, cocoa is foundational to some of Africa's economies and societies. It must therefore be treated as a strategic infrastructure like gold, oil, or electricity, and not just as a mere commodity. For millions of smallholder farmers, it is the backbone of household income and rural livelihoods. For producing nations like Ghana, cocoa underpins foreign exchange earnings, employment, and macroeconomic stability. Indeed, this is the case across more than 20 African countries. The crop's strategic importance to some key African countries is exemplified here. In La Côte d'Ivoire, the lead world producer, cocoa revenues account for 40% of its foreign exchange earnings. In Ghana, the second producer, cocoa is the third largest foreign exchange earner. In Nigeria, cocoa ranks as the second largest source of foreign exchange. This means that the well-being of the cocoa industry in such countries goes a long way to affect the public finances and policies in their respective economies. This informed my decision to revitalize the cocoa industry in Ghana when I got the chance as the elected president of my country in the year 2001. Central to my government's policy efforts was the Cocoa Diseases and Pest Control Program, CODAPEC, that aimed at disease and pest management, which significantly reduced pre-harvest losses and improved yields. This program was coupled with another called the Cocoa High Tech Program, an initiative to boost cocoa yields by promoting the use of fertilizers, improved planting materials, and enhanced agronomic practices. The program also created over 5,000 rural jobs, embedding increased employment directly into the value chain. My government also made a deliberate decision to reverse the ratio of the price paid to farmers vis-à-vis the world market price of the produce earned by the nation in exporting our beans. The cocoa farmer, who had hitherto been the most taxed worker in Ghana, at over 60% of his earnings, came to be paid 70% of the world market price for the produce, with the government keeping 30% of taxes and administrative expenses for the marketing of the produce. Equally important was the deliberate push towards industrialization. During this period, Ghana championed multinational cocoa processing facilities and supervised the establishment of 7 processing factories, including industry global leaders like Cargill, ADM of the United States, and Barry-Callebaut, and Niche Cocoa Company. The vision extended beyond a single presidency, and indeed, by 2010-2011, after I had left office, Ghana reached 1 million tons of cocoa output annually for the first time in its long history, while domestic processing capacity rose above 200,000 tons per year. These experiences should demonstrate a fundamental lesson, which is Africa does not lack the capacity to transform cocoa. What have been missing, however, are updated professional management in tune with the global negotiating marketing skills, scale, coordination, and sustained capital alignment, and investment along the value chain across countries. Today, Africa dominates cocoa production, but sadly remains marginal in the downstream economy where value is created. Africa's limited participation in this downstream cocoa economy constrains job creation, industrial growth, and economic diversification. This is not merely an inefficiency. It is a structural constraint on Africa's development. Ladies and gentlemen, Africa's cocoa future must also be viewed through demographics and consumption. Africa is the youngest and fastest growing population in the world and will increasingly become a major consumer market for chocolate, functional foods, nutraceuticals, and health-related cocoa products. Value capture will therefore depend not only on exports, but also on serving African consumers through local manufacturing, branding, and distribution. Ladies and gentlemen, further consider in your deliberations that climate change compounds the imbalance in the industry. Rising temperatures, erratic rainfall, soil degradation, and spread of pests and diseases are already affecting yields across producing countries. Sustainability is no longer a compliance issue. It is an economic and survival imperative for African cocoa. Therefore, looking into the future to build the Africa cocoa economy of 2040, the Africa Cocoa Vision must advance 4 interlinked pathways. The first is farmer prosperity and youth inclusion. Without farmer prosperity, no industrial or financial strategy can succeed. Cocoa must offer dignified livelihoods, productivity gains, and a future that attracts the youth to underpin intergenerational involvement in the sustenance of the industry. Beyond farming, cocoa offers one of the largest job creation opportunities in Africa across logistics, processing, manufacturing, marketing, and innovation. In a continent grappling with youth unemployment and outward migration, cocoa industrialization can anchor domestic employment and social stability, as well as social mobility. Second is value addition and industrial scaling. Africa must decisively expand into chocolate manufacturing, nutraceutical, functional foods, and pharmaceutical applications. Cocoa's health benefits, rich in antioxidants and flavonoids, remain grossly underexploited despite growing global demand. The third pathway is capital and long-term investment, which is perhaps the most significant gap in Africa's cocoa sector to achieve sustainability. Addressing climate risk, industrial scaling, and job creation will not be possible without financing structures that reflect the biological realities of the times, including carbon capture finance and the long timelines of manufacturing. Short-term financing cycles are fundamentally incompatible with cocoa's production cycle and with the infrastructure investments required for processing and manufacturing. Africa Cocoa Vision, therefore, requires patient capital and supports. Climate-resilient farming systems, agrochemical and input manufacturing, large-scale commercial farming, processing and chocolate manufacturing, pharmaceuticals, innovation. Ladies and gentlemen, I must also stress that it is further time for African countries to have a vision beyond political cycles and seek continental collaboration. La Côte d'Ivoire and Ghana's cooperation to secure higher pricing for their premium quality beans sets the pace here. Cocoa trees outlive governments. Many global chocolate brands have existed for over 100 years. Africa must therefore plant cocoa across generations, anchoring strategy in institutions rather than electoral timelines. The African Continental Free Trade Area offers a historic opportunity to restructure Africa's cocoa industry at scale, supporting regional processing hubs, shared infrastructure, and cross-border investment strategies. Collaboration among producing countries, rather than competition for raw exports, can significantly deepen value capture. Delays in implementing solutions, we should all admit, would attract risks. Risks like, first, at the farm level, it threatens incomes and youth engagement. Two, at the national level, it constrains foreign exchange earnings and industrial growth. And thirdly, at the global level, it risks locking Africa permanently at the lowest rung of the value chain. I therefore invite the Africa Cocoa Vision Panel, particularly private sector leaders, to articulate clearly what Africa's cocoa economy should look like by the year 2040 and not 2050 because of the current transformational technologies of digitalization, artificial intelligence, and others impacting on all endeavors. And second, what they expect from governments, including the fight against corruption in the industry and capital providers. And thirdly, what must begin now from year 2026 onward to build a resilient cocoa economy by the year 2040. The distinguished audience, ladies and gentlemen, I will conclude by commending the conveners and partners of the Africa Cocoa Finance and Investment Forum for successfully launching this maiden African-led platform at a moment when Africa's cocoa sector urgently requires capital alignment, industrial strategy, and long-term vision. The forum represents a decisive shift from fragmented discussion to a finance-first, execution-oriented approach. It is my expectation that the forum will now evolve beyond just a forum into a pipeline from which bankable, investable projects would emerge across the cocoa value chain. Africa's cocoa opportunity remains vastly undertapped, from pre-export finance and working capital solutions to large-scale commercial farming, processing, and chocolate manufacturing, and high-growth segments such as nutraceutical and pharmaceutical applications. Crucially, Africa's cocoa transformation must be built on the principle of shared value. For producing countries and farmers, this means higher incomes, job creation, and economic resilience. For industry partners, it means secure supplies, innovation, and long-term competitiveness. And for investors and capital providers, it means credible projects, structured risk, and sustainable risk-adjusted financial returns. Stakeholders, particularly financiers and strategic investors, are encouraged to regularly visit the bean-producing countries like Ghana and other African cocoa-producing countries. Africa's cocoa future will be shaped on the ground among farmers, factories, institutions, and communities where ambition meets opportunity and where investable projects are formed. If Africa aligns leadership, capital, and enterprise around a shared long-term vision, supported by platforms such as Africa Cocoa Finance and Investment Forum, cocoa can become one of the most powerful engines of industrialization, job creation, inclusive growth, and sustainable shared prosperity, delivering the transformation that Africa must have. So I thank you for your attention, and I wish the conference a tremendous success. Thank you, and God bless.
I think he deserves another round. Your Excellency, thank you for not just giving us history, but a mandate. From 340,000 tons to 700,000 tons. These are not just numbers from history. They show evidence that policy, when serious, will move continent. Let us carry that standard through the rest of the day and beyond. He brought the target forward to 2040. That's a big mandate. Ladies and gentlemen, we can and we will. And I believe the further discussions will give us that impetus to be able to do that. Moderating this panel, ladies and gentlemen, will be Mariana de la Rosa, founder of Gaia Cacao and leading specialist in cocoa value addition. Mariana? Thank you very much. Right. Please have your seat. Joining her will be Dr. Wisdom K. Dogbe, Managing Director of Cocoa Marketing Company Ghana Limited. Thank you, sir. Next, we have Michael Darlington Ahin, Chief Executive Officer of Plot Enterprise Ghana. And finally, we have Vishnu Kakra, Global Business Head for Cocoa. Global Business Head, yes, that's actually what it says, for cocoa at John Vance Industries. Do you have Vishnu?
Well, we have Vishnu will be joining online. There are some personal issues to deal with, so we'll be seeing him right there.
All right. So on that note, I hand over to you.
Thank you very much. Thank you very much. So One of the things that I think was Michel Arrion from ICCO who mentioned at the beginning was Africa is a price taker and not a price maker. So on these notes, you know, there's always been a conversation to move forward with the commodity exchange, have a different exchange. So today the question of this panel will be, what needs to happen to truly make it competitive, profitable, and investable at scale with the business participation? So there's a perspective here on a policy, processing, and business on the part of investing that I would like to get your thoughts on. So starting on the reality check on the policy side of things, I would like to start touching base with you, Mr. Wisdom, Dr. Wisdom, on what's the current production processing picture in Ghana, and what's the CMC role in supporting the local processing facilities?
Thank you, and good. Is it morning or afternoon? I've lost train of time. You know, in Ghana, we produce about 650,000, between 650,000 tons of cocoa and 800,000 tons in a good year, with some cyclical variations over there. Now, President Kufuor mentioned something. He mentioned that a chunk of the value is captured outside of the origin. And that is the case. That's what we are also experiencing, especially in the case of Ghana. 70% of the crop is exported to Europe. So all of the grinding and refining margin is actually captured outside of the origin. Now, on the processing front, we have installed capacity of about 500,000 metric tons, and that is spread out across about 13 registered processors in the country. Now, today, all of them are operating, but most of them are operating below capacity in the ranges of 30 to 40% operation capacity. We can escalate that, we can elevate that to the next level. That is what this 50% processing mandate that Ghana has implemented starting from the next crop year. That is what this is about. Now, the way we get this thing done, before I even get to that, the question that most people will ask is, why are these factories operating below capacity? The question is not because they lack the technical capabilities. It's not a technical challenge. It's a matter of being allocation to the factories. And so with the 50% domestic processing that we announced, we will ensure that the beans actually get to the factories for processing.
Yeah. And I would like to hear then from Mr. Michael. What's your view on this being the leading local processor in Ghana?
Well, it's interesting. Thank you very much. Obviously, you see that I'm not Patricia. That's Michael. Yeah. Dr. Wisdom talks about the issue we are all facing. I mean, if your installed capacity outweighs the yield, then certainly there will be a problem. So it will be interesting to actually get the granular details as to how this promised 50% yield to be processed in country. It will be interesting to get the granular details to see, okay, how best can we also position ourselves to take advantage of that. Clearly, you can see some signs that, yes, this might work. Because in the past, we've had several promises, and they couldn't walk the talk. So we'll be happy to see what happens.
But what specifically are those challenges that you're facing now as a processor?
I mean, clearly, this is no-brainer, like he said, capacity-wise. And in this industry, to be able to even break even for an average grinding capacity of, say, 30,000, like Michel was saying, you would require, a minimum of 70% capacity utilization. And nobody does that, including us. Okay, so that is the number one issue.
I would like to pull in here Vishnu to bring us some perspective on Nigeria. Vishnu, can you hear us? Can you hear us?
Yeah, Isabel, I can hear you loud and clear. If we talk about Nigeria, so I second with my fellow panelists, Mr. Wisdom and the other panelists, that the one of the things that hurts the processor is the capacity utilization. And the second part is with regards to the yield or the outturns that we get when we process the beans into butter or the other solids. If we talk about Nigeria in general, Nigerian crop altogether, we are talking about 320,000 to 350,000 metric ton in total. Out of that, only a limited, I would say 35% of them is allocated for processors. The rest is being traded. So if we talk about John Wins, we have an annual capacity of 36,000 metric ton, but currently our utilization is just around 66 to 68% last year. But in the current year, it has gone up. So in order to be much more profitable, we are already profitable, but in order to increase your P&L, we need to ensure that our utilization touches minimum 75 to 80% on a short note. And the second thing that I would like to highlight upon is that the yield, the conversion which is there, which we have historically seen with the type of technology that has been used in the other parts of the world. I feel that in Nigeria, those machineries, we are still one step back on the technological front. So our yields are there, which is coming around 80%. But in general, if you see some European processors whose factories I have visited, their yields are around 82.3 to 88% around. So this 2% delta also impacts a lot on your P&L.
So Mariana, Michael actually mentioned a very interesting point. He mentioned that we've heard this kind of announcements in the past and it has not worked. So I wanted to address that. What makes this policy change different from any other policy change is that, number one, the target institution, which is CMC, that is in place. We are fully responsible, solely responsible for exporting cocoa out of Ghana. We are not now going to look for new companies to try to convince them to align on how we do the allocation. Not at all. That's number one. Then the second thing is that the capacity to actually deliver on this mandate actually exists already in the country. Like I mentioned, we have about 500,000 installed capacity. We are operating way below that 500,000. And then when we also announced this new policy, we didn't just say we're going to process 50% cocoa beans domestically. We also announced that the crop will be financed using domestic bonds, as the CEO of Cocoa Board mentioned moments ago. So if you put all these three ingredients together, it makes it very different from any prior announcement about domestic processing. That is why I strongly believe that this is the time, this is the way for Africa's domestic processing to work.
Yeah, absolutely. There's one thing we discussed over the call. I remember was the perception of the European African processed products in the European market. How would you like to address this one?
It's a very interesting one. All right. Our quality framework, it has nothing to do with the beans at the processor level. We have quality framework that is established at the farm level, at the cooperative level. And then when the bean is received at CMC level, we also have very rigorous quality processes in place to ensure that the bean is of the highest quality. Whether that bean is going to Hamburg, is going to Switzerland, it doesn't matter. We have that framework in place to ensure that top quality beans is exported globally. That's number one. Now, the second thing is this. How is it that across the continent or across the globe, other processors in Europe and other places, they have the same certification for processing beans locally, the FSSC 22000, and African companies also have this. Mm-hmm. How can you say that because of their location alone, the output is of lower quality? Mm-hmm. I don't think it flies in the face of a logical scrutiny. Now, the other thing we need to look at is this. There is also a shorter supply chain here. Handle time is actually reduced. Transit is also reduced. All of that make an argument for quality preservation at origin.
Indeed. Have you ever seen this perception issue?
Absolutely. I want to look at it differently. I don't think out there the market sees that Ghana supplies inferior quality. Not at all. Our partners in here can attest to that. They know the kind of products we put out there. They know the kind of certification. In fact, in 2012, we were the first entity within the sub-region to have attained ISO 22000 at the time. We've since migrated to the FSCC 22000 that Doctor spoke about. For us, the issue of perception is more about, it's not about our ability, but it has to do with structures. You know, market wants something in the semblance of stability, consistency. You know, there is an adage that where the sugar is, you'd always see the ant moving, you know, towards it. And clearly, for us as Ghanaians and even as Africans, if we put the structures in place, I don't think the market would see us as not a reliable partner, because we've been able to prove, you know, the products. All our partners here, including the big boys, they're able to pick our certificates of analysis and whatnot. Even our sensory tests, they don't go through any third party. They know we walk the talk and we can match everything out there.
Mariana, just to add to that also, if you look at EUDR, for instance, among all the producer countries, Ghana is also ranked as 95%, right? We are 95% compliant. How do you then say they are compliant and then yet still the product coming from origin is not of the best quality?
Yeah.
Some of this is actually support quality preservation at origin.
Absolutely. Yeah. There's one question we had this to pull it back to Vishnu, and it is about what type of strategic partnership visions with the global brands and investors do you see could help African processors scale up successfully?
So if we talk about the partnership with global brand and investors, I would categorize it into two parts. One is the capital partners that we need, and the second one is the offtake partners. With regards to capital partners, like in case of John Men's, we have John Men's a partnership with IFC and BAI for the investments that we have done in our two cocoa processing plants. So and with regards to the working capital funding that we need. So it helped us at the initial stage because, you know, setting up a cocoa plant is a capital extensive investment that needs to be done. So the first thing is having a successful capital partners who you can vouch upon. The second is having offtake partners. Like we have long-term contracts with the likes of your Theobroma, Nestle, and few other clients. So this helps us to ensure that the volume certainty is there. We know that on a yearly basis, this much volume offtake will be offtaken by this particular client. Then we set our quality standards based on the requirements of all these big buyers that we have. So the two key aspects which will help us in having a long-term strategic partnership is one is with having a capital partner, and the other is having a long-term offtake partner. And the third is your local knowledge and know-how that you have in your area of expertise in which we are operating in. Like we are Nigeria based. We started with the trading and linking ourselves with the farmers. Then we moved into processing. Then we acquired 2 assets, and then we entered into downstream manufacturing, selling in small sachets in the Nigeria and the nearby neighboring African regions. So it is a gradual step that you need to take. Initially, you need to have, like I said, key local knowledge and know-how, and from there you move to the next step wherein you find a suitable capital partner, and then as soon as you find a suitable capital partner, you have the technical know-how and knowledge of processing, then you find an offtake partner, long-term offtake partner.
Great, thank you so much. Last question I had here, based especially on what the president said in his speech there, and also based on the topic of this panel, is for the plot team and also Vishnu, you that you're in Nigeria, well, operations in Nigeria. What is the biggest untapped value or cocoa opportunity beyond chocolate that you've seen? He mentioned nutraceuticals and so on. What do you see currently in your operations? How do you see it looking into the future?
Well, absolutely. There are a lot of... okay, it's to Vishnu, right?
No, we can start with you and then jump with the Vishnu.
Right. So there are a lot of untapped opportunities out there, I mean, beyond chocolate. Obviously, as a company, with the help of CMC, we just started introducing some, not just any chocolate, but luxury chocolate into the market. We went to the Choco Affair quite recently, and you know, surprisingly, we had this guy coming from the UAE, and he showed us what he could do with a chocolate-based paste, something I can't disclose here. And we were wowed by that. So yes, potentially a lot of things can happen, and I know that there are a lot of research also ongoing, and we've positioned ourselves in such a way that anything that can give us the necessary money would go after.
Money right there. What do you think, Vishnu? What have you seen in your market, in your processing side?
So in Nigeria, what we have seen is it's a densely populated and most largest population in Africa is in Nigeria. But targeting a consumer market is not just about the population size. It is about how you understand how the market fragmented demand is, then how price sensitive the market is, then the different informal channels through which you can make your product accessible to the larger audience out over there, and an urban concentration. So the key core lessons that we have learned by doing our operations in Nigeria is people are sensitive to price. So like we have seen that small pack sizes and all those things are much more acceptable in the market. Then we have seen the distribution channel which is there. Like a few of the outskirts areas, the distribution channels are not properly mapped. Only in the bigger cities like Lagos, Abuja, or Kanata, all these places, people are concentrated towards introducing their products. Then one more thing that we have seen is that local relevance is there, which beats the global branding. So this is something which I wanted to point upon, like Nigerian consumers, or you can say African consumers, or any consumers what we have seen is that they are pragmatic and they are value conscious. So before spending any penny, they think whether it's worthwhile or not. And last and the foremost thing is that we have seen is the educating your customers about the technical know-how, the premium, the other benefits that they have with regards to the cocoa products, which is there. So Nigeria, but still we feel that in Nigeria, it's a large market, okay, but still it has not been deeply penetrated. So only in certain segments of cocoa powder drinks or chocolate or semi-finished cocoa ingredients, the demand is there, but the larger demand is not there. But in the recent years that we have seen is that the market is growing at a CAGR rate of 8.3%. Wow. But still the local consumption is not up to the mark given the GDP consumption which is there of there. And maximum cocoa which is there is still being exported out of the country rather than being domestically consumed. The consumption, if we speak about, is less than 12%.
Yeah. There's an interesting boost for the internal market. I've noticed that in the other panels there was a shortage of time for the audience to ask questions. So I would like to now look at you and see if there's any questions you would like to pose to our experts here.
Thank you. Thank you very much. My name is Joel Popola, and I chair the Institute of Directors Africa Group. My question is to the panel. What do you think will happen if we have a situation where you can make your own chocolates in your own house? If there are devices that I can produce my chocolate in my own kitchen, how do you think this will change the game for the entire value chain? Thank you.
I think that also feeds into the bigger equation here that Africa needs to process our cocoa domestically. that actually changes the game. It's a game changer for Africa. If you can produce chocolate in your kitchen, somebody else can produce in their factory. That really, it moved the center of gravity as far as processing back to origin. Now, look at it in a grand scheme of things. Ghana says we want to process 50%. Ivory Coast, the conversation is going on over there. There are factories that are springing up every now and then. My Ivorian friends can attest to that fact. If you put all of that together, it transforms us from being price takers, supplier of raw beans to the global chocolate industry, to becoming genuine participants in the value chain. That is what will happen to us if you can produce chocolate in your kitchen, and I can do the same in my backyard.
We have the device now. We have the device now. We are at the other side of what I do is an advisory company in the U.S. in Washington D.C. We help businesses with what we call the non-market strategy and corporate diplomacy, and we have one of our clients who has produced a machine for everybody here to produce chocolate in your own kitchen. Because the difference there is because we advise a country in the East Africa with coffee. The difference is that in Ethiopia consumes almost 90% of their coffee. It's difficult for you to even export the green bean out of Ethiopia. So if you can manufacture chocolate in Africa, we have the population 1.2 billion. We care less about what happened at the international market. People can make chocolate in their own kitchen. Thank you.
It will make a sense of pride, for sure, a good sense of pride for the country, but I think in the larger scale is tough. Somebody else wants to ask a question. Yes, the lady here.
I don't want to ask a question, but ask a question to both of them. Now, when you are saying that...
Thank you.
When you are saying that we can make chocolate at home, yes, agree. What investment it will need, what recipe it will need, what capability we will need. So that question comes again back to you, that if we want to become independent in the country, what we are doing. So what investment is needed? Are we investment ready? So that's the question then. Thank you.
If I may, you see, processing or producing chocolate at home, it's not like producing it out there for people to actually consume. There are a lot of regulatory requirements, because you cannot just, okay, at home you can do something to eat, that's okay. But to put out there, a lot of things go into that, of course, if they can meet all those requirements. The pie is so huge that everybody can have a share of it, and it will still not be satisfied. You pick even exporting raw beans, it can only rake in like what, 2 billion. But if you transform that into finished products, chocolate, powder, and what have you, you have the potential to bring in 10 billion. You know, so the pie is very huge that everybody can have share. No.
Next question, please. Yes. Yeah, the lady. Yeah.
Yeah, I have two main questions, but I'll go with one first. So my point is, we are looking at reimagining cocoa value addition. And currently, most of the conversations are still around conventional processing. Are we investing, are we looking at opportunities into biotech processing? From a research perspective, lots of these giants are now looking into possible areas of biotech due to the volatility that occurred a couple of years back.
Put your microphone a bit closer, please.
Yeah. Due to the volatility that occurred a couple of years back, if Mondelez, as an example, has put that out, so it's no longer like a hidden secret. If they work out successfully in terms of biotech of using cocoa butter, that is going to reduce the demand of cocoa beans drastically. What are we doing as a continent to make sure that we are preparing ourselves for all the changes that keep occurring on a global perspective? Because at the end of the day, the consumer is going to drive what we want, the taste of the product, the processing, and then the technology. We keep investing into conventional processing, which is all right, but as a continent, it looks like we are lacking behind in terms of innovation and research into what the possible future looks like. And that is where maybe other cocoa growing communities are beginning to look at that. My second one would be in relation to technologies. We're talking about FSCC 22000, ISO 22000. Some of these main risks are related to food safety. We still conventionally dry cocoa beans under the sun, where we have our major risks in terms of salmonella from the shells and contamination. Are we looking at investing in different ways of drying to eliminate some of this risk, which will definitely be beneficial to companies like Plot Enterprise, because then you have reduced some of this risk from a harvesting perspective. And we also see these things as common practices in other countries like Ecuador, in Brazil. They are not new ways, but we are currently, as Africa, really still stuck with some of the conventional ways we do our things. Thank you.
I think on this one will really depend on governance, right? On the regulatory framework of chocolate or butter, etc. Like CBEs or equivalent butter, it doesn't act the same, taste the same, or you cannot call it in a certain way your product. But I would like to hear your perspectives in that regard. Who would like to take this one?
It's interesting. I'm aware, if you go to the research division of Ghana Cocoa Board, you'll be amazed with the kind of things you can do with cocoa, from the tree to the pod. You will be amazed. I think what we're lacking is the requisite investment into some of these researches that have come up that people are yet to, tapped into. So maybe Dr. Wisdom would talk about what they have been doing, because you go to the research institute and you'll be amazed with what you can really do with cocoa. So maybe.
Thank you. That actually is a body of work that has been done by the Cocoa Research Institute. I can get more information for you on that. I don't pretend to know everything that they do over there, but one of the things that is responsible for Ghana's quality preservation, why we are known as a country that produces premium cocoa, is the way even we dry the cocoa, the way we actually process, we harvest and all of that. Not actual processing, but the way we harvest and all of that. But he mentioned something very important about the type of investment that we need in a situation like this, in a time like this. So for the investors that are gathered in this room, think about taking equity positions, debt positions. And then for the downstream manufacturers, think about signing long-dated contracts. That is the type of investment that we need to take the continent forward when it comes to domestic processing.
I think we lost Vishnu on this one. Is he still there? Because there's one regarding to his experience on his own venture and his experience on attracting funding. It will be cool to know in a few sentences what was his key learnings or key do's and don'ts to get funding for this type of initiatives. But we lost him.
Yeah. Oh.
Any other question from the audience?
Yeah, my name is Adam. This question probably is directed to Professor William. Looking at funding, CPC for one, current production levels being down significantly. I know that you've been working so hard to raise enough capital to increase your production and then get it maximized. But the question is, in terms of government policy, saying that we want to produce 50% of our cocoa, how feasible is it? First and foremost, you can talk of producers saying that they do not have enough beans. But the question is, even if there is beans, is there funding available to meet? And when you look at the overall production capacities of these factories put together, are they capable of producing 50% of the beans that we produce? That's where we need to get real. And then also, if we're saying we're producing 50% of our cocoa locally or semi-finished product, what are the other funding streams that we need to look at in terms of aggregating cocoa all the way to these factories and the logistics involved and all the necessary. So we cannot fund in isolation. So if CPC is capable of probably getting government-backed financing to increase capacity, make the factory efficient, which I know that you're currently doing, and you've worked tremendously hard to achieve that. Where do you think that gap between you as a government-backed and the private sector, but also all the other values that needs to come? Where is that funding? Have you looked at that stream of funding that can bring you the necessary means, and whether or not, if you even aggregate all the production outlets in the country, you are able to process 50% of it, a reality check for...
Mr. Michael, is that one you want to take?
It's directed, yeah. If others as if we're fighting one-on-one. Look, I think that is a very, very important question. The very simple answer I can give you is, this is very feasible. Why do I say that? Initially, I mentioned that you need certain key ingredients to be available for domestic processing to work. Number one is the target company to deliver on the mandate. CMC, we are the sole authorized exporter of cocoa beans from Ghana. So I'm not looking for new companies to align with, all right? We are basically responsible for making sure that the bean is allocated to the factories domestically. That's one. Then you ask, how feasible is this for the processing companies currently in the country to deliver on this? It's very feasible. We have installed capacity about 500,000 metric tons of processing today. Last year, we produced about 600,000 tons of cocoa. 50% of that takes you about 300,000 metric tons. That's far below the existing capacity today. So as far as the existing company's ability to process, that is there. Now, talking about the financing of the crop, we also announced that we will be raising domestic bonds to finance the crop. What it does is that it gives funding to Cocoa Board directly, and that funding is given to the LBCs. Maria was talking about that earlier on when she was here. They take that funding and they pay the farmers, and we receive the beans quickly and deliver to the factories very quickly. So the main issue, the reason why the local processors today have been operating under capacity is mainly because they don't get the beans. So with this new mandate, 50%, where is it going to? It's going to the local processors. So it's very feasible. The funding, the financing aspect also will be in place for the 2026-2027 crop.
I guess the closing line will be like you say, this new mandate, local processing will really, truly mean for Africa, and for the sector across the region. So thank you very much. I'm being signed, but thank you very much. Thank you.
The next panel is going to look at the vision. We're targeting 2050 and the opportunities for regional growth and transformation. So, ladies and gentlemen, I'm going to invite the moderator for the panel, the Managing Director, Ghana Cocoa Marketing Company UK Limited, Fuad Abubakar Mohammed, to please take his seat and to moderate the panel for us.
Thank you. Good morning.
And we have Alex Asanvo, Executive Secretary, Côte d'Ivoire Ghana Cocoa Initiative. A round of applause for him, please. Dr. Renuka Thakori is the Technical Advisor, Cocoa and Coffee Farmers Alliance Association of Africa. Thank you very much, Doctor. Mr. Joe Forson is the CEO, CJ Commodities. That's Mr. Forson. And Managing Director, Sambeth Global Concepts, So Woyemi. Is he in here? Yes, Fuad, over to you.
Thank you, Dan, and good afternoon once again. Dan, the placement of this panel can easily make you an enemy because you are sitting in between lunch and discussions. But what we try to do is to make it as engaging as possible. Thankfully, the former president of Ghana, His Excellency John Agyekum Fuku, has set the pace for that, so that makes it quite easier for us. Panelists, thanks so much for making time to join us. And I seem to have the largest, the biggest or the largest panel, which is super good. So, Mr. Asamvo, the task for us is to let our audience understand from a coordinating perspective as the Côte d'Ivoire, Ghana Cocoa Initiative. We are in 2026, and we keep talking about the challenges facing the cocoa sector. What is the vision? Do we have to confront 2050 still enumerating challenges? The backdrop is that we've seen cocoa and chocolate companies thriving for over 100 years. Do we have Pan-African companies that have been within the cocoa ecosystem over the past 50 years? What do we need to do from 2026 so that by 2050, we can proudly say that we have built thriving cocoa ecosystem within the African sub-region? So from where you sit as the coordinating point for the two largest producing countries, what do you envision an African cocoa economy by 2050?
Yes, thank you very much, Fuad. That's a very complex question that has a lot of elements into it. But I will probably start from the vision. So why Côte d'Ivoire and Ghana just came together? Because often everyone has his own interpretation. So both countries came together because there were a pressing issue in 2018 that has brought the two presidents to come together, which is a price crash. The price went extremely low, which we are almost facing since few weeks. But the idea was to come together once both countries together represent almost 60% of the production, how to come to a change on behavior. And you will see, for so many times, and it continues to happen, dividing and conquer has been for long a strategy in everything that happened. And coming together has brought the two countries to start looking, where are the issues we have together in research, in market access, in price mechanic, and everything, which has led to a creation of a mechanic called living income differentials, which has been facing series of challenges, but also has shown opportunities. And today, it has demonstrated that the two countries coming together is and can be an opportunity. Recent events have shown that when the two countries are looking at coordinating on price before announcing, by announcing and all, has created some stability and removed the stress of the farmer to sell elsewhere, etc. And we have seen recently that the crisis of the price drop. There were a bit of distraction because each country has felt to lead the problems on their own. The good news is today, as I speak, and I think Dr. Wisdom just left the room, but as we speak, the two countries are coming back even stronger together to look at where do we heading to in terms of market. Where do we heading to in terms of market trends, which is cocoa replacement by certain industry partners. where do we go in terms of policies? Both countries have led the African Regional Standard, a norm that we are defining what is sustainability, that consider key elements in these countries that are important. So there are a series of things. Recently we did also, and that's a very good news, in addition, a workshop on swollen shoots, which is a cocoa disease that impacted us and the market. Because when price went to $10,000, it's not just because there is speculations. That's because there were a drop in production due to a cocoa disease also and the climate that is impacting us. How do we accelerate the research? Cote d'Ivoire alone or Ghana alone won't do it.
Right.
But together, we brought even Nigeria, Cameroon, Sierra Leone, and many other countries in a room. Some were hearing for the first time swollen shoots because they said, well, this is a problem. But then they had the advantage to have Cote d'Ivoire, Ghana, bringing them in to learn and to take expertise also there. For me, and the vision that I'm implementing on behalf of the head of state, these two countries that have created this nucleus, is to go to the next level. How do we come to a point where we create a collaborative approach of where do we want to be in cocoa as Africa?
Right.
Because Africa alone represents 80% of the global production. But also, if you look at the next generation of Africans, the youth population, the population of Africa will cross more than 2 billion people. If they consume,
I'll have to come to you again on the next step,
right.
Especially looking at we've got Dr. Renuka here.
Just what I want to say is that the outlook is how do we move from just exporting to create a more regional or Africa continental strategy consumptions and also processing and mechanic for the continent.
Right.
So that we diversify and we create through research because of the benefit of cocoa in cosmetic, in fertilizer and everything. How do we create that interest that will bring new market opportunities on the continent and elsewhere?
Right.
So that's the strategies we are in. So moving from two countries that have set the scene and now open to start looking really how do we bring everyone together to go beyond. And we are operating and discussing with the African Free Trade Continental Agreement, discussing with few players in different parts of the world. And we are even has exchange in Zimbabwe and Zambia and many other countries that are looking at the example of Cote d'Ivoire and Ghana to really build up regional interest. So that's the way forward. And I can give more details in the next.
Yeah, that's perfectly fine. I think it is super good. I saw the workshop organized on the swollen shoot, and thankfully we've got Joe Forsten here, who has got a well-integrated company doing some of these rehabilitation effort. But before I get to Joe, we've got Dr. Renuka here, who is the technical advisor of the African Coffee and Cocoa Association Alliance. President Kufuor mentioned a key variable of what an African Vision 2050 should look like, farmer prosperity. Now, swollen shoot has ravaged. I remember visiting Cote d'Ivoire back in 2018 and seeing how when some of these swollen shoots started spreading, the biggest loser is the farmer. How do we ensure the farmer is prosperous by 2050?
Thank you so much. So I am wearing two hats here. Of course, COSIFA. So I'm a technical advisor for Cocoa and Coffee Alliance Association of Africa, which we are going to announce in May last week. But initially we were called COFA. So we were only focusing on cocoa, and now we are also focusing on coffee. I also have announced from my side, like I am a founder of Global Sustainable Futures Network, and I have 20 million farmers initiative where I'm working on Farm Carbon Africa. Having all this experience, I feel what should be the vision for farmers. They should be going from the whole mindset of trading to enterprising. I think that will build a lot of opportunities where we will need to require education, investment, value chain creation, not only in the just domestic, but also in all regional level, bringing all stakeholders together, and having only one thing in mind, which is like sustainable practices because of the climate change coming in. So the vision should be like, not only I'm working as a family member of inheritance of, cocoa farm, but it should be like a enterprise.
A business.
The business. And, cocoa is something like, olive or argan. You have seen in the world that olive, argan, such trees, each and every part of this tree is used. And each and every tree has become a really good value chain, like part of those things. And why can't we do that in cocoa? And especially, cocoa, only beans are at the moment the most exploited part of that whole tree. There is plenty other things like cocoa husk and, the pods. And I am especially now investing into making all cooperatives, how they make biochar and cocoa potash, which has a very high value.
Right.
So you can go from, so that is where I want to say that, and for every step, they will need investment, small and big. So it has to come in a way that these all can join. And I think definitely the farmers' daily wages, which are now less than $2, should go higher. And they should also be experiencing the equal share throughout the supply chain, not only the little bit of like 2% or 10%.
Right.
Thank you.
Thanks so much. Joe, back to you. I think I did highlight the point about the rehabilitation projects. You have worked with farmers for a number of years across the western north of Ghana and some part of Côte d'Ivoire. Farmers have lost their productive planting or capacity, largely due to the swollen shoot disease. You are privileged to work in a more integrated ecosystem where you work on the rehabilitation, also working as one of the largest local buying companies in Ghana, and also integrated as a processor. Now that gives you a different leverage. How do we connect the dots? And in addition to that, what are the opportunities for investors to take advantage of these upstream and midstream activities?
Thank you for that. From our perspective, and I'll pivot from where Alex was coming from, the swollen shoot virus is an existential threat to the cocoa ecosystem. And sometimes I think we're still taking it for granted. People might ask why prices rallied to the $10,000 and $12,000. The main thing was production related, okay? And unless we've forgotten a bit of our short-term history, it was the swollen shoot virus, okay, impact on the crops. For instance, in Ghana, where we are permanently based, the effect is on the yield, especially when it's latent. When the infection is very new, yield drops, maybe in the first 2 years of infection, by 50%. And if we don't get very proactive in trying to deal with the swollen shoot virus, trust me, in 2050, there will be no cocoa ecosystem for us to be talking about. All of us. So in as much as we are integrated in the value chain, our fear and concern is how we deal with the swollen shoot virus. Let's take some historical data. Côte d'Ivoire, I think about 4 or 5 years ago, we were producing 2.5 million. They are now producing 1.7. Okay? And 75% of the reason is the virus. Ghana, we went up to 1 million. We are now plateauing around 600 to 650,000 tons. The cycle of crop devastation that we seem to have forgotten within the last year because the prices came down will come again. Give us another 2 or 3 years, the market will react to the same situation that led us to get to those high prices. And look, as farmers, we would like prices to go up, but it's in nobody's interest for prices to be hitting $12,000, $13,000. All right? Because then when prices go too high, of course, consumption will be impacted, industry will react to it, and the results is what we have now. So we just want a price which is sustainable. But then the main thing here is if we don't come together, okay, both consumers, processors, brands, and the producing countries, to deal with the swollen shoot virus, it will decimate the crop. And what I can say is we should look back to Brazil.
Right.
A couple of years ago, Brazil was the number 3 in terms of production. The Swedish broom disease decimated the crop, and the same thing is what we start to see in West Africa. I don't know too much about the impact of
Nigeria,
that in Nigeria,
right.
But I know between Ghana and Cote d'Ivoire, we've lost within the last 3 or 4 years close to 800,000 tons.
Interesting. So, Joe, would that be the lack of capital or investment going into that space? Because if you look at production areas across the Western North, where you have yield levels far below 400 kilograms per hectare, compared to Ecuador and Peru, which is attracting a lot of investment, and you have yield levels in excess of 1,200, 1,500. From reframing, that is a big opportunity gap here for West Africa to take. So what type of capital and investment do we need to put in that space?
So the investment we must be looking for pretty much should be capital in research. Still, I want to focus on the virus.
Right.
Right. We can, invest in new varieties and all that. These countries that you're talking about, they don't have to deal with any virus. Okay. In our settings, if we don't deal with the virus, okay, no matter which investment that we make, eventually it will come to naught. Because you shouldn't forget it's a virus. Just like COVID, it spreads very quickly. So as we speak now, though the data is not available, I can tell you the effect of the virus, because we're on the ground, is very serious in the 2 countries. Very serious.
Interesting. I believe the Cocoa Research Institute of Ghana and that of Nigeria, or WACRI generally, were set up largely to deal with the cocoa swollen shoot virus disease over 70 years ago. And we are still talking about that. So my next round of question when I come back is what do we need to do differently? And I think that is why the initiative has started coordinating these activities. I'll move on to Ola, and if permit me, I'll use SK, which is much easier to mention. Sunbirth is arguably one of the most ambitious African companies now. You're operating in Nigeria, you're operating in Ghana, you're operating in Cameroon, which is very assertive to say. Now, what is the outlook for a company like Sunbirth, not only within the African region, but also venturing into the global ecosystem?
Yeah, thank you. I think the key thing for me is the vision I see is when you call this sort of conference, and in the next 10, 20 years, you have all the traders, international traders, seated there wanting to be partners with the conference. Because when I look in the room, I can only appreciate every international partner seated there. It means they respect the relationship. And how do people take Africa much more seriously? Skill. All the things that Mr. Alex, Mr. Joe have spoken about is skill. And I'll give you an example of the Dangote refinery in Nigeria. It built from nothing. They said it can't do it. It's built it now. Trafigura Glencore sends vessel to Nigeria to buy products to distribute across Africa. So, and in Africa, the cocoa industry, over 80% we produce, and a lot of different geographies dictate how the trade is done. Whose fault is it? Africa's fault.
Right.
Because we've decided not to shift our mindset to the sort of mindset of skill. If we in Songbird Global Concept, our vision is 8 years ago, I used to work for my dad. And I said, oh, I want to export. He said, no, that is too difficult. One way or the other, I started export by God's grace and his support. And fast forward today, we are the largest exporter of cocoa out of Nigeria. Then we sat down as a business, largest cocoa exporter out of Nigeria. We need to change our mindset. Top 3 non-oil exporter out of Nigeria. Oh, we can do better than this in 8 years. And we said, we are going to build a 70,000 tons capacity cocoa processing plant that will be done excellently. That will be opened maybe March next year by God's grace. Same thing we did in cashew, 70,000 tons capacity. Brand new, we are not buying second-hand
machinery,
equipment.
right.
Because if you want to do it very well, you are going to get excellent results. And this is the vision I would say. If I build a 70,000 tons capacity plant for cocoa cashew, then I must now then invest in the backward integration to build a sustainable business. Then I must think about how do we increase production. All the soling shoot issues, production issue, there are things that companies do in our setup, best-in-class research institutes, train people, send people to different schools, research. I don't believe in expecting everything from the government. It's private government.
Well, that is typical of Nigeria. You are your own government.
So when you talk about Dangote refinery today, the government had to say, guys, you need to stop importing oil, because I'm also into oil. I have franchise in oil. And the government said, you guys need to stop importing oil. I'm like, that's it. We must scale, backward integrate. And there are just 3 features in this industry. And it starts with sourcing, which we can do. We source over 70,000 tons already. And we say, when we build this plant, we are going to get the right trade finance structure. I disagreed with my colleague. I had to go meet him after that. How do you expect international bankers to bring money to you? You just need to encourage the local banks to take more risks and find the mitigants to support trade. How do you go bring JP Morgan to come finance your trade in Nigeria when we have a lot of money on the continent? About 2 months ago in Nigeria, we wanted to raise a commercial paper of 100 billion naira. The market gave us 168 billion, just one of our companies. The second company wanted to raise 25 billion in the market, a roofing sheet industry that we run. They gave that business 50 billion. I'm like, and we say there is nothing to be done on this.
The market is always ready to give you double.
The capital is there. People just need to be disciplined, have vision, and invest in their talent. And I see Africa, if we get sourcing right, we get trade finance right, we get processing right. Who says an African cannot buy a barrel caliber? And when you do this in sourcing, you capture the sourcing margin instead of having traders take the margin away from you. You are able to invest in best in class. People talk about talents in Africa. Oh, they are not quality talents, but it's the quality of investments that investors in Africa has brought that has failed to train the talents. So I think now the mindset needs to shift. We need to have the mindset of skill, and this will solve all the sold shoot issue, price issue. When a player on the continent is able to buy 700,000 tons of cocoa, then everybody will just come and be begging and say, we need a bit, because the factories in Europe is going to suffer. And not because you can use the product alone in Africa. I don't believe in talking about consumption in Africa.
you can produce and still integrate into your processing plant that is in different regions. We have built our London office, our New York office, just because of access to market and access to talent, access to diversified geographical risks around finances. So I think scale, partnership, good people, they are what we help Africa scale. And in 10 years' time when we are here, I want to see everybody in front here. You're getting almost 10 people saying they want to be the lead sponsors, and that's what we want. Thank you.
Well, I think it is not surprising. Thank you, SK. It is not surprising that Sambeth graciously sponsored is our biggest sponsor for this forum, and you have clearly demonstrated why Nigeria is the largest, most populous country in Africa, the most assertive, because you've clearly given us an explanation of what scale means. Sambeth is less than 10 years, but they are very ambitious. And that is the sort of outlook that they're looking at in 2050. SK, I'll come back to you later, because the processing space is sort of a bit crowded. Earlier, the previous panel mentioned excess capacity in Ghana and in Cote d'Ivoire. We don't want that to happen also in Nigeria as well as in Cameroon. What is the next stage? And that will push me to... Unfortunately, we don't have that much time.
Okay.
Yeah, so I'll come to you. But back to Alex. I think someone has a question about the reimagining of value addition. And that is when you need what I'll call patient capital, or that risk capital, to go into ventures that are initially not commercial. And that is what Malaysia did with palm. Okay, palm in West Africa, we know palm just to be for abenquine, for making, for soup making, but they've created a petrochemical industry out of palm. That is what we want to see with cocoa in the next 50 years. And Alex did mention a coordinated approach to research. How do we attract the right partners into research and to the right patient capital to invest in some of these industries?
Well, I think you touch the point. Reimagine is also for us Africans and also businesses in Africa to remove ourselves from emotion. And why I say emotion is that very often we say, well, we have to do chocolate in Cote d'Ivoire, we have to do chocolate in Africa. I think it's great. But how much each of us eat of chocolate? That's the sad reality. So we have to look, how do we transform businesses that match the needs that we have? Cocoa can deliver cosmetic. Cocoa, out of cocoa you have fertilizer. Out of cocoa you have soap. Out of cocoa you have juice. You have alcohol. You have everything. So it's us. How do we push our local businesses to take the lead of it? And this is our role, government, to create that framework. And that framework, industry need to be embedded in. And when I say industry, it's not just African companies, but also foreign companies can see as an opportunity, having partner locally. The technology is here, the asset is here, but then the other piece of element that you have to look at is the market framework. So recently, one big chocolate in Africa called me and said, how can you help? I need to have my brands and some of my products to South Africa. But it's way cheaper to buy it from Europe because we have zero tax to send cocoa to Europe. But then sending cocoa from one of our countries to South Africa costs a huge amount of money because of different tax system and all this. I told him, yes, you're right, it's a serious problem. So far, that's the only route we have. However, we, the initiative, and also the countries are within the scope of the African Free Trade Agreements, trying to explore and test. And what I suggested is that cocoa could be one of the elements for test, and there are conversations happening. But if cocoa and other commodities could be part of the kickoff, rather than just exploring only policies, but practically looking at few commodities that are important in the continent and for the continent and check really the process of going to the root, then we will start attracting businesses. And this is where capital and investment then come in, but not before.
Right.
You need to have the framework. You need to have the space and the market opportunity to bring it. And I think that, for me, one way of reimagining, because then parallel to that, the research, and I was recently at the Krieg, they have found all this. There's even alcohol from cocoa. There is wine, cocoa wine. There is champagne, chocolate. So there are things that can happen, but it's the framework. And this framework will help capital investor to really see how do we build startup, how do we support startup to jump into some of this business opportunity,
Right.
because then we create that broader. Because if it's just we produce in Cote d'Ivoire, we eat chocolate in Cote d'Ivoire, I feel that it's a little bit challenging. Or same in Ghana, why increasing your processing if at the end we are talking about only primary processing?
Right.
We are not talking about finished product.
Right.
So then you will increase, and then at the end you get stuck to the
Right.
point of, all right, I have all this butter, what do I do with?
Mm.
While we all know, and I think my friend Joe is here,
Joe, right.
every processing, you have to start looking at what do I do with the powder? What do I do with the butter? What do I do with the liquor? So that means that as soon as you start processing, you need to already get this point. Otherwise, you will get some of the product in your hands. And I think that's why I said emotion. Yes, we have to do things in Africa, but we have to create a framework. We have to build the opportunity out of it.
Thank you, Alex.
Yeah, thank you.
Dr. Renuka, you wanted to make a point, but I want you to tie in that with the opportunity that the carbon market here presents to cocoa farmers and the general cocoa producing countries.
Thank you so much. So just a few points on how we can, for the disease. So yes, we are using same varieties of the cocoa. So we need to have diversification in that to understand which would be highly, tolerable variety, and that is highly needed. But also with the waste, at the moment probably most farmers either they burn the waste or they leave it in the farm. And that also creates disease. And therefore, we need to transform that waste into biochar. And so that biochar is highly, through that process, if we are using the biochar or making biochar appropriately, it has been a Vera methodology already there, which can create a carbon credit project. And therefore, that can bring a partial income to the farmers, where 60% of that credit revenue goes to the farmer directly. But that requires digitalization, because MRV, monitoring, reporting, and verification system is highly important. And there I come to, the immediate threat of EUDR. That will help farmers to get into digital, things going on and establishing that this coffee or cocoa seed has come from, bean has come from, this farm. And that will help us to create MRV properly. So I think now with the carbon credit projects, it is not so carbon credit is an end product. But we need to put several interventions which are sustainable interventions like agroforestry or other things. Then only a carbon credit project can be created. And therefore, I think that's highly important for farmers to understand that we are investing into making their land and the products and agricultural sector more sustainable through that process. It's just an excuse to get into sustainability.
Right, that's
Thank
fine.
you.
I think it's good that you've touched on upcycling opportunities here within the cocoa value chain. Joe, Alex made a point about, I think I did highlight it on that earlier, excess capacity. So over the next 25 years, are we still going to be saying that, okay, Ghana is now processing 50% into semi-finished product? Meanwhile, you look at Asia, which is the largest continent, is a net importer of chocolate. China just opened its market to Africa. And I must add, Africa on its own is a net importer of finished chocolate. So the market is there. What do processors need to do differently? Because Sunbirth is setting up a processing factory also to do up to cake or butter or powder. Is that what we need by 2050? We want to see African companies also playing key role within the coverture space.
So, when it comes to processing, I think sometimes we are very emotional in the way we talk about processing, right? If you speak to any processing company, and I think Michael was here from Plot, the margins from primary processing, really, it's not much. In actual fact, primary processing is very close to just exporting beans.
Right.
All you're doing is you're crushing beans into liquor, okay, and selling on a ratio basis. If you get to secondary processing, that's where you start to feel the margin. And the question is, how do we, get part of that value chain in terms of processing downstream? Unless we're able to sit down and have partnerships, with the final consumer of our products, which is the brands. And please don't come and kill me. I can see some of the processing companies here. Which is the brands. There should be a deliberate conversation where brands are being made to invest downstream. So that we just not selling them cocoa liquor, we're just sending them couvertures. In actual fact, we can actually send chocolate, full chocolate from here, from Africa. But if we limit ourselves to producing just the primary products, naturally we'll be putting ourselves in a hole. With beans, you can store beans for a year and a half. If we, let's say, increase processing to 70, 80%, and for some reason, like what happened this year, buyers pull back, that they're going to use CBEs, all right? We are just going to be stuck with products. And it's very difficult storing products.
Right.
So the way forward with respect to products, is to get brands, have deliberate conversations in terms of investment, where there's some kind of partnership with local processing companies in origins. So as part of that value could be communicated downstream. But as we have now, if all we have to do is just extend on the level of processing we have now, I don't think we will get the desired results. I really don't think we'll get the desired results. Unless we are coming into that space where we're able to produce proper semi-processed, not primary, secondary.
And tertiary as well.
Chocolates, look, let's not be emotional. We don't eat chocolate in Africa. We like our, how do you call it?
Eba.
Eba. The Eba and the kenkes, If you look at the per capita income in our countries, we're not going to spend money to buy chocolate when we have to eat carbohydrates to be able to survive in the sun and survive. All right? So the consumption is not home. You understand?
Right. So we need to build the right partnerships with.
So when we start to talk about, making chocolate, I think I heard one or two were talking about making chocolate in our kitchens. Who's going to eat that chocolate? You know what I'm saying? All right. So we should just strengthen the areas where we think we have advantage. We have the beans, we have the logistics.
And processing capacity.
Let's get into processing, which is valuable. And that needs to start with a discussion with the brands.
Right. Thanks so much, Joe. And lastly, to SK, I must mention companies that come in new have got the benefit of learning from experience of a lot of other companies. And arguably, a Malaysian company called GCB is one of the most profitable cocoa processors now. They've got a chocolate factory here in the UK. Now, Sunbirth is setting up a 70,000 capacity processor. Our hope is that we don't want Sunbirth to be similar to the existing processor. We want something new. And as you rightly mentioned, we want to see an African company being at the forefront, one bidding for, I wouldn't mention a name for company to say that I'm trying to market them. But then when a company is up for sale, some of the top 3 brands who are well integrated, we should have an African company, a CJ, a Sunbirth, ready to take that. But what do we need to do now to make sure that we are prepared for that takeoff?
I think in business, like everything is in phases. Like I said, I started business working with my dad, who was one of the biggest local buying agents in Nigeria. But I didn't export because he didn't want to take export risks. Then I came in, learned from his experience. God helped me, had access to capital because the family helped. Then built integrity with banks. By God's grace too. Then you keep going, you start to export. Then you change your mind and say, I can get more value. I don't want to sell to traders again. I want to try and access the market directly. I want to try and, okay, I've accessed the market. I can't access it alone. We need to invest in deliberate talent hunts. We need to create offices that can give us market access, offices that can give us access to finances. Then you get there, you do the trade, you say, okay, I can still as well process in Africa. Then when you process in Africa again, you say, like I heard when they said emotions in processing and all. I don't think there is so much emotions in processing if people want to get it right. I think it's about you deliberately creating that market. No one is going to bring the market to us.
Right.
So if we look at the ratios that they are very thin, what next? We need to look for experienced people within our business. For me, I know my strength is sourcing and I'm strong with trade finance. Then sort of product marketing and all these things, I can't do it. But I'm going to sit with a headhunter, find the best person for the business and not put myself into the operational part of that business. And be able to get who's got this experience, who's going to get this right bonus for creating these opportunities. So when we look at the ratios, it's because we sell to traders that are ready to kill us from the get-go. But when we've shown that our businesses are good enough, then you see the brands, even they could give you pre-financing for your product.
Right.
So
They'll be chasing us.
about how we intentionally create it. And when I look at Sunbed today, I look at the growth we've had, good talent. God has helped, and good people. You can't do business alone. And when I look at this, it gives me hope that when we start our processing plan, it's still the same access to market we would use. And we'll get to a point where we say, we've done well here. And in Ghana, in Cameroon, where we are currently working, entering Cote d'Ivoire in 2 months max now. And the key thing we are doing there is looking at underutilized capacities in this market. We have all this factory data. It's not just trying to do business without data. We have reports of all the factories that are underutilized. Can we speak to them? Can they sell instead of creating? A lot of them are bank issues. A lot of these factories is because of the owners have failed to recruit the right people. They've used short-term working capital to build long-term projects. And it's caused them issues. So we've looked at all these things, and if we're able to replicate what we are doing in Nigeria, in the 4 producing countries, if we have 70,000 in all these places, what next? We see a chocolate company under stress. We'll do a leverage buyout by God's grace. And that's the way from sourcing in the origin, you are already able to raise the trade finance for procurement. Then you then have processing capability. Then you then have the retail. Look at the cocoa prices now. But the retailers who are buying it at 2,700, 2,600, they are still selling chocolate at the normal price. So a business, as you start, you must continue to dream, have your 5-year strategy, have your plan, look at the enablers. And from sourcing, you can source, you can provide trade finance within your own framework, you can process, then you can still own the company that still processes that you are able to. It's doable. Like I always say, when I have these dreams and think about what we can do, I just think God needs to give people life to achieve it, because there's so much to do if you take these risks. And the key thing is Africa must start to finance Africa. I'm so proud of the Dangote refinery because I can talk about it 100 times, because Africa financed the big part of this project. Over 80%, Afrexim Bank and AFC, AFDB provided it. So Why can't we do it for cocoa? So I just think it's businesses having vision. It's not magic. We need to look at the height of our industry. How can we get there? And it's just a process. We got good people and government policy support. And I think the good thing I've seen about Africa is if you scale, policy immediately supports you. You don't need to beg for it. So it's just about scaling it. Thank you.
Thank you, SK. I think you have perfectly summarized the panel for us. And clearly, this panel is for Africa Vision 2050. But the question we need to ask ourselves when we convene again is, what have we achieved by 2030? What have we achieved by 2035? What have we achieved by 2040? And then the bigger vision of having huge Pan-African multinational companies. Thank you so much. Unfortunately, I cannot grant time for questioning. So kindly thank us, and thank you so much, our panel. We need to take a picture. Yeah.
We are honored to receive complimentary remarks from His Excellency, Ambassador Ali Toure, the permanent representative of Côte d'Ivoire to international commodity organizations and spokesman of the cocoa-producing countries at the International Cocoa Organization. Your Excellency, the floor is yours.
Good morning and good afternoon. I want to make remarks on the last panel. I think it was a very interesting panel, and it was a panel on Nigeria. That's a good thing. I want to say a few words before I start my speech. I believe that we have everything in Africa to have a sustainable cocoa economy, and it goes for all the commodities. Population 1.5 billion people. We have good research center in Côte d'Ivoire, CNRA, Centre National de Recherche Agronomique, and Cocoa Research Institute of Ghana, Craig in Ghana. We have about 80% of the world cocoa supply. And I want to mention something. In 2001, the Common Fund for Commodity, which is an intergovernmental organization based in Amsterdam, produced a study of 10 years regarding the byproduct of cocoa. As a spokesperson for cocoa-producing country, I can tell you that the 20 countries, member states of the ICC have that document. In addition, if you go every October in Paris, France, and you attend Salon du Chocolat, you will see what consumers do with our cocoa beans. So, the only problem with Africa is politicians. We have the framework, we have the resources, we have the African Continental Free Zone. We need to make the right decision. And like my brother from Nigeria said, we can finance all of this within Africa. That's the comment I want to make. Thank you. His Excellency, Mr. John Agyekum Kufuor, former President of the Republic of Ghana. I know it's a tribune for cocoa, but I'm speaking under the umbrella of an ambassador sitting here, Mrs. Sarah Mani Afwe, Ambassador of Côte d'Ivoire to the United Kingdom and other islands. I would like to express our gratitude to former President John Kufuor. During hard times in Côte d'Ivoire, about 10, 15 years ago, he worked tremendously, and Ghana has helped us install a lasting peace in Côte d'Ivoire. At that time, he was president of the Republic of Ghana. So I would like to express the gratitude of my country, the former president, for helping us. Her Excellency Mrs. Amani Sarah Afwe, charity begins at home. So I have to sit my ambassador first. Ambassador of the Republic of Cote d'Ivoire to the United Kingdom and other linen. Her Excellency Mrs. Sabah Zita Benson, High Commissioner of Ghana to the UK. Mr. Stefan Unina, Executive Director of Cocoa Trade and Invest Africa. His Excellency Michel Arion, Executive Director of the International Cocoa Organization, ICCO. His Excellency Mr. Alex Assanvon, Executive Secretary of Cote d'Ivoire Ghana Initiative. Dr. Ramson Abe, Chief Executive Officer of Ghana Cocoa Board. I cannot start my speech without expressing all my thanks to my brother, Fuad Abubakar Mohammed, Managing Director of Ghana Cocoa Marketing Company, UK, for reaching out for me in my capacity as spokesperson of cocoa producing countries of the ICCO to be among you today, which means that I'm here as spokesperson for cocoa producing country. Anybody who wish to ask questions about Cote d'Ivoire, then you can talk to my ambassador sitting right, the beautiful lady right here. So please, everything I say, engage the producing country. It doesn't engage Cote d'Ivoire. Thank you very much. Eminent members, private sector, industries, dynamic actors of the value chain of the world cocoa economy, all protocol observed. It is indeed a great honor for me to be invited to give remarks on cocoa financing at this inaugural Africa Cocoa Finance and Investment Forum 2026. Let me congratulate the initiators of this forum for their diligence and dexterity in establishing the forum as a gateway to address one of the intractable challenges in cocoa production and trade, lack of adequate financing for cocoa production and trade. Having seen the caliber of people that are present at this forum and listening to the quality and depth of presentation, the lively exchanges of ideas and views that were made, I'm reasonably optimistic that cocoa financing is now getting the right attention, as investors can clearly see the huge potential in investment opportunities in cocoa production, marketing, and trade in Africa. A lot has been said today about the structure of cocoa finance, needs at every stage of the cocoa supply and value chain in Africa. But often, focus has always been on the financial needs of what I would loosely call the downstream segment of the cocoa supply chain, involving cocoa traders, exporters, processors, manufacturers, and logistic providers. Regrettably, less emphasis has been given to the financing need of, again, what I would call the upstream segment of the cocoa supply chain, involving cocoa farmers and cocoa cooperatives. Indeed, as many speakers here today have indicated, cocoa businesses are capital intensive, and indecisably more capital is needed in the downstream segment of the cocoa supply chain. However, the goose that lays the golden egg cannot be forgotten and should not be neglected. Much has been written and said about the bankability of farmers of agricultural products and why financial institutions are reluctant for providing financial products to farmers. While acknowledging that there are higher risks of default for loan repayment by farmers, this is due largely to constraints associated with income, generating capacity of farmers, and low returns to the investment. However, the paradigm is shifting for cocoa farmers as the sector can generate substantially huge returns that can make cocoa farmers more bankable. In this respect, my remarks will focus on the financial needs of cocoa farmers and how this forum could be used as a platform to mobilize global capital into the African cocoa sector that will provide more benefit for cocoa farmers and their farming communities. Cocoa production is characterized by a significant large number of smallholder cocoa farmers who are poor and unable to break out of poverty cycle. However, this dynamic must change, and it is already seen to be changing. Cocoa production must be treated as a business and not as a subsistence occupation. Cocoa farms must be structured and operated as a business entity to enable them to deal more effectively with the common challenges of low farm income, seasonal and intra-seasonal cocoa price volatility, and limited access to finance. A level of investment is needed for cocoa production to be a business. And this level of investment will depend on the scale of production. Generally, investments are needed in land acquisition, land preparation, tree planting, farming inputs, farm maintenance, and farm management. Therefore, as more farmers become more business-oriented, the opportunities for investment and financing increase exponentially. Financing is a precursor to accelerated development of the cocoa sector, as it will lead to increased productivity, improve farmers' livelihood, better risk management option, farm infrastructure development, and value addition to capturing more income. Therefore, there is a high potential for global capital mobilization into Africa's cocoa sector to help inject the required financial resources to drive the accelerated development of the cocoa sector in Africa. But it is important to note that the success, profitability of capital mobilization will depend on the sustainability of the cocoa sector, which in turn depends on the remunerative price of cocoa. This means that there is a nexus link between cocoa price, cocoa sustainability, and cocoa finance. At this stage, allow me to point out that the global chocolate market is valued at over $100 billion US, and cocoa producers earn a teeny fraction of the global cocoa economy, between 5 and 6% of the retail value of the chocolate bar. This issue has become a persistent issue in the cocoa value chain. The majority of profit are captured by chocolate manufacturers, marketers, and retailers. The International Cocoa Organization, ICCO, under the leadership of our Executive Director, His Excellency Michel Arion, have adopted 2 strategic plans of action, 2019-2024 and 2024-2029, which prioritize farming living incomes, sustainability, and market transparency. Allow me at this stage to express the gratitude of the producing countries to Queen Mathilde of Belgium for actively siding with our farmers. As United Nations Sustainable Development Goals advocate, she argued that a price increase for farmers is a moral duty and essential to eliminating poverty. Finally, let's all endorse the Abidjan Declaration made on the 26th of March 2018, where two visionaries, His Excellency Alassane Ouattara, President of the Republic of Côte d'Ivoire, and His Excellency Nana Addo Dankwa Akufo-Addo, former President of Ghana, expressed the willingness to define a common strategy in order to increase the price received by cocoa farmers in their respective countries in a sustainable way. Remunerative cocoa prices that provide living income for cocoa farmers will enhance the economic, environmental, and social sustainability of the cocoa sector, which will invariably drive more investment that needs to be satisfied by cocoa financing. Cocoa finance is mostly in form of loans that must be paid back. Higher cocoa prices will help with loan payback and significantly reduce loan benefit. So the key determining factor in this dynamic is the cocoa price, and that is the message I want to leave you today. Of course, higher and remunerative prices must be underpinned by cocoa supply management to reduce price volatility. We know that too low cocoa prices are not good, and too high cocoa prices are not good as well. What is important is that cocoa price must be remunerative and must allow cocoa farmers to earn a living income. In conclusion, I'd like to say that with Africa accounting for almost 80% of the cocoa production and trade is a cornerstone of economic activity in Africa. Cocoa finance for cocoa farmers and cocoa cooperatives should be a priority. As more cocoa farmers produce and trade cocoa as a business, more investments as well as more financing would be required. Cocoa finance remains a powerful driver of cocoa sector development. However, its effectiveness depends on affordable access, effective institutional support, and broad alignment with development goals. The door Africa is open for potential investors and financial in the cocoa sector. The investment environment is friendly and lucrative. Investors are welcome to partner with us to expand financial inclusion that improve access to credit for cocoa farmers, to promote digital financial services such as mobile banking that is growing exponentially in Africa, and to strengthen farmers' bodies to improve their bargaining power to increase their share of value. Thank you very much for your attention. I'm sorry I couldn't speak in French, mais c'est cela pour une prochaine fois. Thank you very much.
Thank you so much, Your Excellency, for that powerful message. And I want to thank everybody that has been a part of this conversation. Thank you for adding to the tapestry of conversation in cocoa and how now Africa can continue to grow and expand in this space. So to deliver our closing remarks, please welcome Joel Popola. He's the chair of the Institute of Director Africa Group and one of the convening leaders of this forum. Please, a round of applause while he makes his way.
Thank you so much, everyone. I want to stand on the existing protocol laid by His Excellency. Good afternoon, everyone. As we bring this remarkable gathering to a close, we are reminded today that that was not just a series of conversations, it was a convergence of vision. Expertise and shared commitment of the future of Africa cocoa economy. From the fundamentals of global markets to bold ambition like Africa Cocoa Vision 2050, one message has come true clearly. The future of cocoa is not something to wait for. It is something we must actively share and shape together. We have explored the critical role of financing, the urgency of building resilience and inclusive commodity exchange, and the immense opportunity in value addition from bean to bar, and far beyond into innovation. But most importantly, we have strengthened the bridges between policymaker, financial producer, and industry leader. And I want to use this opportunity to call on African in diaspora. We are talking of finance. Nigeria in diaspora alone remits over $30 billion annually. I want to call on African diasporas. I want to call on African governments, especially the African producing nations, to showcase the champions, cocoa champions like Aola Sunkami, exactly what Chief Obasanjo did to Dangote when he was the governor. He showcased 3 industrialists in Nigeria, and that is why we have Dangote today. Dangote, Otedola, and Adenuga. And I want to call on the Federal Republic of Nigeria, the President, Ahmed Bola Tinubu, to showcase Sunbet as a champion for cocoa, and the same thing in Ghana, the same thing in Cote d'Ivoire. If these people have government apparatus, they will change the history of the continent. They will change the history of cocoa economy. We need government support for this company. Once again, thank you so much, everyone. And I will hand over to my partner to give a vote of thanks. Thank you so much.
Okay. On a final note, because it seemed to be a very serious masterclass that doesn't have our brains fried, because the conversations were so warming and so interesting that I didn't know which panel or which speaker was my favorite. But I take up a lot of things, and I think I want to go back home and become a cocoa farmer. So, it's all right. Thank you, Joel, for that speech as well. And to bring this inaugural edition of ACFIF to a formal close, please welcome Oyina Karikari, Executive Director of Cocoa Trade and Invest Africa, for the vote of thanks and the announcement of the next ACFIF editions. Over to you, Onika.
Distinguished speakers, honored guests, partners, investors, participants, on behalf of the conveners of this Cocoa Finance and Investment Forum 2026, thank you all for making today's gathering impactful and forward-looking. We are deeply honored by the special keynote address by His Excellency, former President John Agyekum Kufuor, the former President of the Republic of Ghana, whose leadership and vision continues to inspire Africa's economy and agricultural transformation. We also acknowledge Her Excellency Sarah Amani, Ivorian Ambassador to the UK and Ireland, also Her Excellency Zita Benson, High Commissioner from Ghana to the UK. We also acknowledge His Excellency Alex Savannah, and also the chair of ICCO, Michelle Aaron, for being present with us. Sincere thanks to our speakers and panelists, partners and participants for advancing thoughtful dialogue on finance, value addition, and investing across the cocoa value chain. We are especially grateful for our headline sponsor, Sunbet. global concept for its strong support, and to the London Stock Exchange for being such a gracious host. We are indeed in the capital of the financial district of London. Today's conversation must continue. A strong pipeline of investment has been showcased by Sunbed and other institutions here at present. We will indulge you to join us in the designated meeting rooms to assess some of these pipelines, which can be accessed by pipeline.acfif.org. Looking forward, ACFIF will convene in New York Stock Exchange September this year, alongside the UN General Assembly. We also have a strong partnership with Chocoa in Amsterdam for the Cocoa Amsterdam Week in February 2027. And the all-time Origin edition will be in Africa the first quarter of 2027 as well. Bringing conversation back to the source. So in a nutshell, we visited London today. We will visit New York in September, but we'll take this back to the source, back to the origin. For our partners, investment partners, and all our sponsors, we say thank you, safe travel. We look forward to seeing you very soon. Thank you all for attending. Thank you sincerely. Thank you.